All right. Good morning, everyone. Welcome to the
Happy
Private
New
Stocks Trading
Year!
Room. Yeah, that's right. New Year. Happy New Year, everyone.
2026. Full
That's
of
right.
new things we want to achieve, trading-wise, streaming-wise, personality-wise, you name it. How's everybody doing? How are you doing, Jonatan?
I'm good. Thank you, Dirk. How are you doing?
Very, very good. I'm very excited because today I'm also starting my new official trading system. It's finally live. And I'm going to be live tracked every time I'm basically online here, how it's doing. And then we'll see if it's able to pass the evaluation stages and get into funding. It's going to be exciting.
Nice. Awesome. So let's just kick it off here right away. This is I haven't really been looking at the charts much at all over the holidays. Of course, I've looked a little bit, but haven't been trading anything for this year or the last, I guess, two weeks of last year as well. So it's been very, very relaxing. Definitely been recharging my batteries here. I am still in this AUD NCD long on my personal account. I did close it on some of the prop firms though, because I saw that swaps on some prop firms was very high, and it was actually not worth it. So I closed it. On my personal account though, it's swaps are very good. It doesn't really show much. Before we go into looking at the markets here, we have one person who really wants us to answer his comment here. So yes, couch surfers. KYC verification showed as failed, so I manually sent all my documents to the support team for re-verification. It has been 3 days, but I haven't received any reply. So we cannot help you with that here in the live stream, unfortunately. We're just traders, trading the markets, looking at the charts. If you have any questions on technical analysis, I'm happy to help you. But for matters like this one, all you can do is reach out to support. And on our homepage, we have live support, and they will help you out. If they have to manually go through the KYC process, you can expect it to take a while. And of course, now with the people coming back from the holidays right now, I think now is this Monday today is where most people officially come back from the long holidays. So it should be picking up now and should be happy to help you out. But reach out to support if there's anything you need help with. Okay, so Dirk, have you been trading anything?
No, I haven't. I mean, on paper, I've been trading a bit, but I was actually taking the time over the holidays to relax a bit, be with family for sure. And once my family was in bed, because I like to be a night owl, night owl. And
did you say night oil?
Night
like
oil,
night
yeah,
oil.
whatever
Nice.
that is supposed to be, a new one. Yeah. And so I worked on my new trading strategy that I mentioned just now. It executed also a couple of trades already, however, not live, but I recorded the trades nonetheless to start building up the track record. So we had so far 8 trades. 5 of them were winners, earned a total of 62 pips, and I'm using this dashboard here online to track all the trades. So the logic behind it, it's a bit an irony, this trading strategy, because it ties into what originally is my expertise, which is options trading. So this whole trading strategy is built on the things I know and learned throughout the last 25 years about options trading. And I wasn't expect much from this, honestly speaking. Then mid of December, I saw, well, actually, statistically, this has a pretty good edge. So let's try to make something out of. And it passed all my severe levels of verification, especially the part where most strategy usually fail, which is asking, is this just a coincidence because I backtested so much? So did I by coincidence find the variation, the setting that works on this specific data set, or does it have in real edge, and it passed all the tests, even my last tests, which is always where I simulate a 30% degradation of the strategy once it goes live, because life is never going to be like backtesting. Life is also never going to be like walk forward analysis. Passed this also. So what I did is I said, I set up a new high stakes account with 20K on it. Paid for it by myself, by the way, guys. So this is not sponsored in any case by the fivers. I know they would have done this probably, but I want this to be very authentic, of course. And then I said, well, this is nice. It's beginning of a year. So let's put this into action live. We can show that during every live stream. We can show it if it should fail, like if it should not perform at all in a live setting, or hit the risk metrics, or violate the risk metrics or whatever, then it's a great learning for everybody out there, including myself, of course. And if it passes, it's nice, then we have a whole year of where we can track a new account that automatically trades. So there's no manual intervention of me necessary anymore, and can see, can an automatic strategy actually earn something for us on the markets. So I'm very excited about this. Naturally, we are going to get the first signals at 6 a.m. New York. Why 6 a.m. New York? Because that's 4 hours before the cutoff for US options is, US currency options with New York cutoff, that is. And I'm always going to trade the 4 hours before that, positioning that, and then closing them exactly at the cutoff. And so we'll still be at 6 a.m. New York. It's 12 p.m. our time. So we are still going to be live later when the first trades, hopefully, if the market volatility and everything is correct today, based on what you see here, are going to come in today. So let's see how that is. It definitely works.
Very interesting. So first of all, just wanted to say, I think I'm very impressed with what you have built here. It's I like how visually confirming this is. It's easy to understand when looking at it, and this is just amazing. I mean, imagine, it just blows my mind the things that you can build today. I mean, what we're looking at right here, this is probably the if you go back 10 years and you look at, let's say, a hedge fund, and someone at a hedge fund says, okay, I want a dashboard in the back end where we can see all our trades, this would probably be a first draft of what that would look like. And get a blinking live icon up there, and you get the trades coming in. This is just, it blows my mind. It's the future of trading and automated trading, especially using AI to develop strategies and tools, is it's just mind-blowing how quickly we are moving forward.
It's insane, no? It's like something like this. Before that, now I could build this all manually, but this front end that you see right now here, where the live trades are displayed, recorded, and so on, that was totally built by Claude Code. I just told it, I wanted this, and that. Went a bit back and forth, testing if everything works, but that took me maybe a day. I could have built this myself as well. I'm capable of that, but I know it would have taken me at least a month, probably more, because I would have needed to look up some of the stuff with some elements that I'm not very profound in, especially when it comes to something like JavaScript, which is an insanely illogical coding language to me, at least. I'm not very good and profound in it, but the stuff on the back end, of course, like the trading strategy itself, is not something I discovered with AI. I had a hypothesis because of certain things that I noticed while trading options, and while especially managing my risk trading options. So looking at all the Greeks, gamma, delta, vega, and so on and so forth. And I formulated this hypothesis, collected the data I need for this, and then, of course, I utilized Claude Code to program for me back tests in Python and statistical validations. Again, something you can do yourself also, but it takes a lot of time. So all in all, this process to get the strategy from the first idea to, I want to try this on a live account now, I let it trade because it passed all the validations that I want to see, is like It took me like maybe 2.5 to 3 weeks. Like you just said, rewind time by 10 years, it would have taken me at least half a year, at least, probably longer, because I would have needed help for some of the elements. So would have needed to pay somebody, upfront a lot of money to design something with still an outcome that you don't know. Is it going to really end up earning me money? But I like this so much, not because obviously because I'm proud of it as well, but because the timing is just good. It's like something completely new, which can be openly shared without me having to be afraid also that somebody steals my edge, if the edge proves to be real. That is, of course.
And how come you can't be afraid of, like, why do you think someone can't steal your edge?
Because what you see here is just the data that goes, or parts of the data that goes into the system. What goes on in the background is much, much more complex.
Yes. Okay. Yeah. So you're only showing us the
results,
like the end results, and not what
yes.
what creates the result.
So,
yeah, that makes sense. Makes
like
a lot of sense.
what you see below here right now is like this the probability distribution. These are just the strikes and notionals of puts and calls on euro dollar, for example, expiring, the max pain calculation. So this is all data you can very easily also get publicly. This is not something that is like secretly done by me in any sort. But what I do with this data, and of course also the additional data that you don't see that goes into that system, that's of course something I don't want to share.
Right. Yeah. Makes sense. Okay, so I wanted to share my my screen here while I just go through the markets. I'm just going to do a quick little market scan here, and I will be adding the interesting pairs to a green list, and then we can kind of go through and see if this aligns with some of the things that we see happening right now. Of course, from a geopolitical standpoint, I'm sure everyone watching here is aware of the US going into Venezuela over the weekend, arresting Maduro and bringing him to the US to potentially put him through the US legal system. And that has obviously caused some geopolitical tension. We saw gold today opening with a gap up and printing a very nice local swing low here. We're going to talk a little bit about gold in a bit, but I just wanted to go through the markets here. Look at first the USD pairs. I do suspect that with gold rallying on geopolitical tensions, we should probably see the dollar being strong today as well, because that's what you get. The dollar is usually strong when there's a lot of fear and uncertainty in the markets. It's a risk off currency. So we're looking at USD CHF. We have a very strong bounce from the lows here. No major changes on the higher time frames here, but we are seeing a local bounce here. USD CAD also seeing a strong local bullish move from the lows here. We can look at Euro USD, strong move to the downside. Same thing with GBP USD. GBP USD is still holding the trend very nicely here. Looking at AUD USD, holding a level nicely here, holding the trend. We got NCD USD. No major movement here. USD JPY looking rather strong. I think it's I don't know. This is a tough one. USD JPY, but overall we're seeing some dollar strength here. Gold strength. We're also seeing some strength in the stock indices here as well. Gap up on this morning after closing a very indecisive candle this Friday. So despite the geopolitical tensions with gold moving higher and the dollar looking a little bit stronger, we are also seeing risk on moves. So what I'm thinking here is the sentiment is obviously still quite bullish. Probably, the AI narrative is still very much alive. I mean, we've just talked about how Dirk created a platform. Probably just took him a couple of hours, which would have taken him a month or more if coded manually. And that's what makes AI exciting. The productivity is exploding right now, and it's probably going to be continuing to do that for foreseeable futures. We see the NASDAQ moving higher today. We got the S&P 500 moving higher today. So we're not in the risk of environment, but we are in a slightly more, you know, nervous geopolitical.
But it's a nervous geopolitical. I think you're right. Nervous geopolitical risk on market. Why risk on? Because Venezuela, I mean, they have the largest oil reserves, to my knowledge, in the whole world, apart from other stuff where they're sitting on a lot of natural resources. To me, it's a bit like, it seems like on a high political level, maybe there are talks that they are kind of dividing the world in newly, maybe Trump and Xi Jinping saying like, hey, we take Venezuela, maybe we're going to take Cuba, Colombia, and Greenland also, especially when it comes to Greenland. There has been a lot of talks and social media posts as well by the administration or members of the US administration. And maybe, in return, they are going to allow China to take Taiwan. Maybe they're going to give up on Ukraine or something like this. So Europe is kind of being squeezed between those two superpowers right now. Because by the end of the day, I think nobody, like neither China nor the USA, really want war, because they are so interconnected when it comes to economy and trade relations. But maybe they are dividing the world new. And in this case, I kind of understand and don't understand that markets interpret the whole thing with Venezuela as a risk-on move just because there's so much money on the line. It always saddens me to say something like this, but sadly, this is how markets work, right?
Yeah. But they also, markets also price in the, future volatility and future events. And looking at Venezuela right now, I mean, Trump going into Venezuela is not really going to change the global financial markets. I mean, something happening between China and the US, that's going to affect the whole financial markets. Anything that threatens the security of the countries which holds the largest part of the financial markets, which is Europe, China, and the US, and of course also parts of Asia. But I think it's, we're looking at it from a point of view where it's China, the US, and Europe are the three main dominant sectors within the global markets, and anything that happens that would jeopardize the security of those countries, which would put us into a very most likely bear market, recession, whatever, right? But Venezuela is a small player in the global markets. I mean, of course, they have the oil and they have the oil reserves and everything. First of all, we're not political commentators here. We're not experts at this, but we are following the news and we have some idea of what is going to affect the markets. One thing that I think is very interesting here is that China, I believe, respects strength and power, right? So when the US shows that they're not afraid of going into countries and destabilizing leadership and putting in their own support, the democratic leaders or whatever, it shows to China that they kind of, I think China respects that strength, right? Europe, on the other hand, they're stuck. Like, they're the white knight of this whole situation. They are the ones who waving the white flag, saying that you can't invade, you can't just go invade countries, which I 100% agree with. Yeah, I mean, you have a sovereign nation. You can't just go in and say, all right, we're going to just remove your leader and then put in a CIA accepted leadership here. You can't just do that. Like, for Russia went into Ukraine. That's not a good thing. We have countries, we have borders, and we have sovereignty, right? But they're, I mean, if everyone else is doing it and you're just saying this is wrong, guys, and I feel like Europe is going to be a massive potential loser in this race. They have a very bad regulatory framework for technology companies like AI and crypto. They're not in the forefront of that. And now this situation right here where they are not in a world where it's like survival of the fittest, Europe is going to be lagging behind, but they're doing so for good reasons. But it's a bit problematic, I think, for Europe. So we're looking at the European economy. It's not looking super good, you know. I definitely think,
especially in Germany. Yeah. And
yeah,
I mean, you can see, I totally agree with what you tell, and I'm going to be very blunt here. Europe is declining much, much faster than everybody else in the world. It will in the future become a third world. I'm pretty much convinced by this. Why?
yeah,
In Germany here, we see a lot of traditional industries fleeing because electricity costs are very high. If you're in production, especially industrial production, the cost for labor are very, very high. The side cost the employee has. So you cannot just see, what does a person earn. You have to add 30 to 50% to that, which is the true cost it takes. It costs an employer here to employ somebody. And if you're an employee, you still just end up with 50% of what your gross salary is. That when inflation was high, everything costs more, nobody can afford housing anymore, and so on and so forth, yada yada. The true problem is, in my opinion, in Europe, that Europe is only good in regulation. The first question, for example, in Germany here, when you had like drones over airports, like we had in many other countries as well, drones showing up over airports, and they had to shut down the airports in Munich, for example, for hours and hours and hours. So what was the first question or statement from the politics? Well, we need a regulatory and law framework for situations like this. No, you don't need. You need a gun to shoot drones down like this. It's very easy, very simple. That doesn't mean that you cannot put it into a framework, but you don't think necessarily about the law framework first. And it's with many other things. There's a regulatory framework for the dangers of AI. But nobody's really investing in AI, at least here in Germany. Maybe it's different in Sweden. I mean, Sweden, in my opinion, is a bit more on the forefront there when it comes to innovation in comparison to Germany. And it's with many, many things out there. A friend of mine, I think I made this anecdote in the past here, also said, well, while everybody is innovating, for example, cars, Europe is very good in regulating stop signs or traffic signs, and I think that's a very nice metaphor for what is going on here. And I think in Europe we have to get used to it, because the USA and I also condemn just going into another country and basically annexing it, because you cannot be against Putin doing that with Ukraine and be pro-Trump doing it in Venezuela by the end of the day. That's a double standard then. But
that's the world we live in, isn't it?
It's the reality. They are trying, USA and China are trying to, place the chess pieces on the board, that they have at least or that they can remain at a status quo for the next decades and maybe centuries, which in a way can be beneficial for the world, because the status quo means, nobody's willing to pull the trigger and do stupid things like sending nukes. But if you're not living in a country that is in charge of a status quo, it can become quite difficult. And this is also the reason why we see all these right-wing movements here in Europe. But I don't want to get
exactly. I mean, the world is very, divided between two extreme poles. There's a lot of populism going on right now. And this is a good comment from Scott here. Says, I feel there's a cycle that nobody understands with nature, and nobody can prevent nature forces. So what I would recommend that you do, there is a book called The Fourth Turning. Actually, there's two books. The first book was written in, I believe, the 70s or the 80s, called The Fourth Turning, and they explain cycles within human nature and within the world and within history, different cycles. And these are, the book is written, I believe, by a economist or two economists, so they are very well aware of the effects that these cycles have on the financial world. And basically, it's the whole cycle, the whole theory around this cycle is based on different generations. So, for example, the generation that was born during the Second World War is going to have a very specific worldview because of when they were born. And when that generation comes to power or comes to age and becomes our politicians, the world will be run in a certain way based on when they were born and what the world looked like when they were born. And they create a certain world. And then people are born in that new world. And when they come of age and come to power, they will create a new world based on that. And it kind of goes into these cycles. And I believe the cycle is about somewhere between 80 and 100 years. And according to this theory, and by the way, the book that was written in the 70s or the 80s, everything kind of played out exactly as they said. They now have a new book that they released a couple of years ago saying that we are now in the fourth turning. And it's very interesting because in the fourth turning or the end of the fourth turning, it will always end with a crisis. And some of the important signs is, extreme polarity in politics, a sense of something big is going to happen, a sense of there's something major wrong with society. And we have populism driving the political landscape. And that's exactly what we're seeing right now. And if the fourth turning always ends with a crisis, and I think that's where we're going right now. We're going to this will all accumulate into a crisis. I think we all see it and we all feel it, what's going on right now. There have actually been periods in history where everything was fine. Everything was fine. The society was fine. Countries didn't fight all the time. And the economy was pretty good. People had enough. Inflation was not super high. The cost of living was not super high. Things were actually happening in a pretty good, ordinary fashion. But now we're in the late stage of that cycle, and it goes into like the first, the second, the third, and the fourth turning, and we are now at the end of the fourth turning,
So
which is yeah.
What happens after the crisis, according to that book then?
So after the crisis, we're repeating the cycle. We're starting the cycle with a new world, a new world order, basically, where the crisis dictates how that first turning will turn out, and the generation that is born during the crisis will then create the new world that starts with the first turning. It's kind of like that meme where it says, weak men creates hard times creates tough men, blah blah blah, and then it kind of goes on like that. So it depends on it's really cool, actually. It's one of the it's the only long-term cycle that I have seen makes sense. And I've tried to look for a lot of different cycles, cycles in things like
credit cycle,
natural cycle, like planetary alignment. I mean, I've looked at everything, like the lunar cycle, the planetary alignment cycle, things where you try to look at alignments between nature and the financial markets, and this is one of those cycles that just makes sense, because if people are growing up in a certain environment, that will undoubtedly affect how they view the world. If you grow up in a crisis, you will probably have a different worldview than if you grow up in a perfect society. And it's just interesting how. So, highly recommend you check that one.
Kind of resonates with me a lot, I must say. We've been talking so much about AI here. We've been talking about the downsides on the job market, probable downsides, I should say, on the job markets of AI. So maybe that could, something like the crisis. Nobody is employed anymore. All the wealth is distributed through a handful of individuals through the world. Everything is done by AI and robots. So 99.9% of the world is in poverty. And through this, people born within this crisis, knowing poor, but knowing at the same time there is actually enough wealth to feed everybody, we get something new, be it something like in universal income, which I'm a big fan of, by the way.
So the name of the book's title is the fourth turning. Neil Howe has written it, I believe. So I believe that the last crisis, I believe, was probably the Second World War, and then before that we had the crisis like I think I know that the French Revolution was one crisis. We have the American Revolution was a crisis as well. And if you look at all those happenings, as after that crisis, you have a completely new world based on what happened during that crisis. I mean, Second World War rewrite, the borders of Europe, and a lot of the things that happened following the Second World War was, you know, based on that. And of course, the American Revolution created a whole new world order, that one as well as the French, the French Revolution as well. So I think we're gonna have a crisis, and this time, for me at least, it's obvious that that crisis will involve AI. We have a new form of warfare with drones and AI, autonomous drones, autonomous robots, all of that, right? And I think the crisis that we're going into now will involve AI. And I think the new world order that we're going to get in after the crisis is going to be one that this planet has not seen. It's going to be a completely new society where we will view just humanity in a different light, because we are creating a new entity, aren't we? Like, we're creating a new type of entity. We're creating AI. Uh, Humans have never created something that has the possibility of evolving itself and actually becoming something that might actually be considered in 100 years alive. It's just, you start thinking about it from a philosophical point of view, it's actually pretty crazy what's happening.
Yeah, it is. It is. Interesting. Yeah, I saw, was it a Twitter post or interview? I don't know anymore. A couple of days ago, one of the lead IT engineers at Anthropic, he publicly says he is using Claude Code for 95% of his work. So his job
Yes,
scope
exactly.
now is like totally different from what it used to be. And he said, I've become like 3, 4, 500 times as productive as I used to be when coding by myself. It's insane, right?
What's interesting about that is the fact that the person that said that is the creator of Claude Code. So
Yeah.
he created Claude Code with manual code, and now Claude Code is improving itself. So he's actually using Claude Code to improve Claude Code. So now what we have right now is, I mean, I hope people see what's happening right now. They have created a very powerful AI agent that is now improving itself. It
Yeah.
has access to your local hard drives. It has access to the internet. It's happening. Okay, it's definitely happening. Now imagine if you run this locally, 100% locally, without the boundaries of Anthropic. I mean, in a couple of years, we're probably going to be having our own personal AI at home, and I mean, if it's improving itself, whatever safety measures you're going to put into that, it's going to be able to override it. Because I saw also a post from Sam Altman, who is now looking for a new role at OpenAI, which is focused on security and philosophy and things like that. Because it says that we are slowly moving towards a phase where the AIs are becoming so good at cybersecurity that it's not becoming, he's not saying it in those exact words, but it's becoming a potential threat. and yeah, it's hopeful. I mean, from a personal point of view, I'm using AI a lot because I don't want to be left behind. I feel like I need to use AI because I need to get. Otherwise, I'm going to be left behind. I would not be able to do the work I do today at the pace that I do it without AI. But if I'm going to be honest, I would prefer that we just completely stop the development of AI until we know what we're doing.
Yeah, but we're never going to know because they are black boxes. No, what's going on? The architecture inside a large language model, which is based on something that is called transformers and vector state embeddings. And basically it's pure mathematical. Of course, there's a weight distribution, and the weight is going to tell you what word is likely going to come next after the word that was just typed or that I see as a prompt. And the problem is you can never know why exactly the output that is generated was outputted by the LLM. So it's in a sense, not in a sense, it is already a black box. All neural networks are in a sense a black box, and this is just accelerating. So we are giving it already out of our hands because there's to stop this, everybody would need to agree on this, and they still wouldn't stop it because the incentive of being ahead over your competitors is just too high. Because if you're ahead by a large margin, means you've pretty much won the game already. This is also why there's so much money, billions and billions and trillions of US dollars poured into this at the moment. Some people would say, including myself, my God, this is insane, with such an insecure outcome. But we have to accept it. And I agree with you. Sometimes I also miss the days where we didn't have AI because I have to force myself very often and take a step back and tell myself, wait, Dirk, before you use another prompt now, you have to use your own brain first. Like, think through this on yourself, by yourself. And when you come to a conclusion, then you can use AI, then you can use Claude Code or ChatGPT or whatever to engage in a discussion whether you're right or wrong, or whether there are other perspectives to tackle this problem. It's very easy for people, like I said, including myself. I don't want to just say that's other people's problems, to kind of export your brain and stop thinking, or stop critical thinking at least. There are already, like at my daughter's school, there are students already saying, teacher, why do I have to learn this? I can just ask ChatGPT.
Of course. I mean, the education is going to be completely restructured, and the testing landscape is going to be completely restructured because there's going to be a point where people around you will not know that you're using AI glasses. Things like that. So everything needs to be restructured. Before we kind of move on to the next question, I want to answer this one. So a deep question perhaps, but as someone with kids, I have 3. Are you optimistic? So without going too much into this, I can say that I've been very interested in artificial intelligence for many years, long before OpenAI and long before all of that. And I've read a lot of books on it, and I followed a lot of research in this field. When I was younger and I saw the Terminator movie series, I got completely hooked on the idea of AI. And it's been a big interest of mine. And I must say that I have no reason to be optimistic. Like, I have zero reason to be optimistic. And I remember thinking that there's a lot of people that are worried about the environment, humans' effect on the environment, and saying that we need to, lower our carbon footprint because otherwise the world will end and the planet will die. And I never bought into that. Like, I never bought into that. I thought that was a bit ludicrous, and I didn't really buy into that whole thing. But now with AI, I understand that concern, because for the first time in my life, I understand what people mean when they talk about the environmental dangers of us as humans and how we're going to destroy the planet, which tells you a lot about what I think about the future of AI. So yeah, no reason for me to be optimistic at all. I've seen no proof of this ending well. With that, let's make some money in the meantime, okay? Because whatever's going to happen in the next, I don't know, 30, 40 years, probably 15, but let's just say 50, okay? So that our kids have time to grow up and have grandchildren and all of that. Euro
So basically,
GBP.
you're saying let's earn money. The world is going to end, so we might as well end with a lot of cash in our pockets, spending it on blackjack and other stuff. And no, just kidding, of course. I
Well, I mean,
like
yeah,
to be optimistic, you know. Just my final words, maybe on what we're discussing here. I like to be optimistic. The world nowadays is a better place, a more secure place, a more livable place than it was 300 years ago. Your life expectancy is higher. Of course, that doesn't count for every part of the world, but for the majority of people here, and it's always going to be like this. So, of course, there are going to be a lot of bad things happening. My concern is really the wealth distribution in the world. That is a very big concern. That 99% are going to be left behind, and we are going to get something like a feudal system, you know, where you have your lord that you report to, which is named Elon Musk or whatever. But at the same time, there are going to be a lot of benefit. We are closer to really solving some of the major medical problems, like curing cancer, like basically making you immortal, whether this is something you want or not, turning the clock in your body back to the times where you were at your greatest when it comes to brain activity and physical activity, strength, and so on and so forth. It's, I think, one of the most interesting times probably in all of history to be living,
yeah,
because the events we're going to see unfold, we are seeing unfolding right now, are going to be very fast. We're not talking about 50 years, 100 years, where you can say, this is not going to concern me anymore. The speed of change is picking up as
yeah.
models progress. This is my final word. And of course, you're absolutely right. We should go into the charts also a little bit and not get too philosophical here.
I just wanted to one thing. Imagine if you could we could imagine if ants were intelligent beings and we could listen to their conversations. Okay, so they're out in the forest, it's an untouched wilderness, and then all of a sudden there's a few humans that comes along and builds a town, and the ants are going to say, well, you know what, it's actually pretty good, you know, because now we're better off now than we were before, because now we can actually go over here and we have a little bit more food and we can get some sugar, and it's actually pretty good. So that's not really a huge problem. But then the humans build a mega centers for graphic cards or whatever, and they completely, you know, remove the ants because the humans don't care about the ants. That's pretty much what I see with AI, but AI being the humans and we being the ants. So yes, it might be better for the ants in the short term. You know, they were better off than before, but eventually, a super intelligent AI will probably not care too much about humans. If I'm
And in both cases, there's nothing the ants or probably us humans can do about it.
Yeah, probably. Well, no. I mean, we're not going to stop development of AI. Okay, so oh man, let's it's all yeah, okay.
We can talk about gold if you want, because I want
We
to
can talk
show.
about gold. We can talk about gold.
I know a lot
So
of. Yeah.
I wanna go long on gold. We have gold right here. I think I do really like the fact that we had a big move to the downside. We got a big candle right here. There's a lot of wicks to the upside and the downside. Almost every type of candle here is an indecision candle. And then today we have a big daily candle to the upside. Looking at the 4 hour, we have sort of a break above this range, and given the scenario that we've just talked about and the geopoliticals and how the situation in Ukraine doesn't really seem to get resolved, and it's not going to get resolved in the short term, mostly because I don't know, Europe needs to kind of step up and take on a bigger role here, and they're not going to do that. So I think gold is going to continue higher. The cost of living is going to go up. Inflation is not going to be crashing to the downside. There's a lot of reasons for gold to continue higher. And then looking at the technicals, if we put a fib on from that low to that high, we do see that gold came into a beautiful level right here, the reload zone right into the middle here. And then if we add a box here with sort of like the from the all time high up here and then all the way down to this previous consolidation. We do see that long term, it would make sense for gold to build a base right here for a continued move to the upside. So I wanna go long on gold, but I'm also thinking that we might come down here. I probably want to build a long position within this area, and then if we continue higher, that might be the case. What's your view on gold?
Yeah, I think in general, a good idea to look for long entries, just because, of course, the nature of gold, we are still in a very strong trending market. Geopolitical landscape, like you just said, favors gold as well right now. I just want to point out one thing here, because it has happened again and again and again, and I cannot stop talking about it. We again moved very close to the 8 weeks moving average and then bounced off. So there was your chance to enter at lower prices, around 4,285. That would be up already by $150 again. If a breakout now really comes already, and we very quickly move to something like 4.6 or 4.7, I don't really know. I would prefer a scenario that you just made, where we maybe see a little bit of a dip down and test the bounce off. So still my preferred strategy for gold, and I missed this trade because it didn't exactly hit the 8 weeks moving average. Of course, there was still a gap. So you have to see these at a zone and not as precise points of price where you can buy. But I really would like to see another one maybe coming down, maybe into the area of 4,300 and then buy up, because I'm also quite sure we're going to see a breakout over the last all-time high, and sooner than later, probably. Sooner, I mean within the next 1.5, maybe 2 weeks, we're going to see prices of 4,600 upwards, especially if the situation on the geopolitical landscape gets worse in a case that it benefits gold. That is, of course, meaning like that we see after Venezuela talks about Cuba, about Mexico from Donald Trump getting more specific, then for sure gold is going to benefit from it. I mean, by the end of the day, we have to ask ourselves a question as traders: is the chance of the US administration like backing off and openly making a statement such as, Venezuela, all good now, we're going to withdraw from this, we're going to leave it by itself, the people are happy that the president is gone, very quickly going to install new elections, and we're not going to mention Greenland, Cuba, or Mexico anymore? Is that chance higher? Or is the chance higher that they are going to stronger word, or at least at the same level, word the ideas of invading Greenland, invading Mexico, and invading Cuba? I think the second has the higher chance, and this means that would be something that is positive for gold, right? Because in a scenario like this, you want to head to security, which is gold. Ironically, of course, that still means stocks are going up as well. This is a bit weird in this situation right now, but I think the chances of gold trending higher are much are stronger, are higher than us, collapsing to something like $4,000. So you don't for a trade like this, I think you don't even need like something like technical analysis, maybe for the timing. But in this case, the timing can also leave you behind, because if things continue to move, they are probably going to move very fast to the upside.
So you think, I mean, Trump going into Venezuela, that's one thing. Going into Cuba, I mean, they have had a history of, I mean, they definitely have a history with Cuba, and with Venezuela, I mean, accusing Maduro of narco terrorism, that's a reason. But Greenland, I mean, the US going into Greenland and annexing, that's,
I know it's unthinkable, I agree with you, but many things that come out of the mouth of Trump and that we would have considered 15 or 20 years ago as unthinkable being done or said by a US president are the new reality. I can always just say, I remember very, very well, because I was in the USA at this time, the whole stuff with Bill Clinton, and we are just talking about, physical activity with the women in the Oval Office back then. The huge amount of backlash this caused. Now we have somebody who's a supposedly convicted criminal who can tell and do whatever he wants, and there's none to very little backlash. So we live in a new world, and I think we have to get accustomed about things like this maybe becoming reality. I get, especially to you as a Scandinavian, who has a special flavor with Greenland, although Greenland belongs to Denmark, no, but still, of course. And so why not? There is a possibility that this is happening, and I think it's higher than the administration suddenly becoming quiet and peaceful and leaving things as they are.
Well, if the US goes in and takes over Greenland, that would be unprecedented, because they would go after a territory controlled by Denmark, which is in historic sense a rather neutral country, part of the Scandinavian countries and the whole Scandinavian region. I mean, of course, you had the Germans during Second World War went into Norway, and used to, but and then of course Finland. But in general, it's been a peaceful coalition, right?
Yeah.
So the US going after Greenland would be completely unprecedented, because we have kind of been, which is this is kind of insane though, because we've been accustomed to the US, going in and going into countries, but they're going into countries like when we think about US going into foreign countries, we're thinking about Latin America and the Middle East, right? We're not thinking Europe, right?
Yeah, exactly.
And this is the thing though, like it's something completely different. It's basically the US saying that we don't care about any of you, that it's going to be a message to the European Union that we think you're incredibly weak and you have nothing against us. You had nothing to do again. To stop us and to go again. They're going to take over Greenland for security reasons. From a security point of view, it kind of makes sense, but still, it's
and it's not. I mean, again, let's not get too political here, also. But from a trading perspective, I think this is a good bad example. Or an example, let me put it more neutral, of how from a fundamental perspective you can choose your trade also. And for me, it's really just, are they going to keep, not are they doing this, are they going to keep talking about invading other countries, especially Greenland, or are they completely stopping doing that? Because if they stop doing it, gold would not crash probably, but not see a super duper upside in the short term. Are they going to continue talking about it? Maybe their wording also getting harsher. Maybe also not because they plan to do it, but they want to show strength, or they want to demonstrate strength to China, for example, as well. We are willing to do that. Like you said at the beginning of the stream, this is something China respects, somebody showing strength. Then it's something positive for gold. That's why I said I'm a little bit afraid, if like waiting again for the perfect entry here on gold, that one could miss the train totally.
Yeah, I think so as well. So I don't know. I'm just trying to. I'm looking at the markets here. I think I'm gonna switch over to my screen because I did create a little list here right now. So I'm gonna go through this green list here. So first, at the very top, I have my open positions, and right now the only open position is AUD NZD, which looks pretty good. I like that. I'm gonna keep that one open. I'm just waiting for a higher swing low here, and I haven't even moved my stop loss to entry because there's no reason to move to entry just yet. Gold is on the second list here because that's one of the most interesting one right here, and then I have these ones on the third list. which I'm gonna look. I'm gonna look at these, and I'm gonna see which ones I want to move up one step. Because if I move them up one step, that means it's interesting to enter a potential trade. Now, Euro USD is obviously interesting right here. I think that we're seeing Euro weakness here, and I mean, you guys know that on the bigger picture, I am interested in seeing a move down on EU, but that might not happen until a very long time. Looking at the local structure here on a daily, I have to kind of stay true to the idea of this being range and the idea that Euro USD is hitting its support right here. I think we have a long an opportunity to go long here on Euro USD.
Yeah, I agree.
So I'm going to move. Yeah, so I'm going to move that up to the second list for a potential long, and then we got Euro NCD, which I'm just keeping it on this list because I'm going to move it down here as well. I'm keeping it on here because I want the short, but I'm going to do so once the 2 level-ish area is broken to the downside, which can happen in a week or two. Next one is CAD CHF. I actually have an open position on this on one of my accounts. It got stopped out on my personal account here, as you can see, and it got stopped out on the Fivers and a few other firms as well. But there's one prop firm that kept me in this one for I don't know why, but I'm still long on that one. Potentially looking to go long on. A new trade here if we can have a break and retest of that level. So still looking for potential trade here. So I'm going to move that up to this second list. And then we have Euro GBP. Now this is breaking down. So what I want to first figure out is this a clear change in trend? That's the first thing I want to figure out. So what I do here is I'm adding a few moving averages, and I'm trying to figure out here on the weekly if it has broken the trend. And if we look at the weekly, I do think that we have, we have higher lows here. And it kind of looks in a sense that the break lower here could potentially be a break of structure, and we're breaking the 20 EMA on the weekly for the first time in quite some time. And going into the daily, we're looking at the moving averages. We have for the first time since May, we have the 20 EMA crossing below the 50 EMA. That's a bear cross. The EMAs I am using mostly is the 20 to 50 and the 100 or the 200. So 20, 50, 100, 200, mostly 20, 50. Those are my main EMAs, so the 20 and the 50. But am I using the EMAs in my trading? Not really. The EMAs are not based on... The EMAs are not giving me clear signals. It's not a way for me to get signals. The EMAs are just giving me information, and then with that information I can enhance my analysis. So basically what the EMA is just showing you what's the trend like, just to guide me in my decisions. So I do think that Euro GBP is actually breaking down here. So I want to be waiting till tomorrow. I want to see what happens tomorrow. Such a good level right here, right? It's such a good potential retest area right here. If we look at the 3-day time frame, I like the 3-day time frame because it's a good mix, or the good average between the weekly and the daily. So if you look at the 3-day, I'm gonna be looking at potential support levels. Actually, I'm gonna go to the weekly first to see if I can find any high time frame support levels. And usually what you want to do is you want to go back and you want to look at the previous swing point. If you're going short, you want to look at the previous swing swing low, and that's going to be this area, right? So that's going to be this area. So I will look at that as being the support here on the weekly. If we go back to the daily, yeah, that's a good level. I think that's a good level. So if we're going to go short on Euro GBP, we might want to be looking at that level down here around the 80 0.866, somewhere around here. And then let me go into the 4-hour to look at where that entry might be, which probably might be somewhere around here. Now, if that is going to be the risk to reward here is simply not worth it. So what I would have to do then is I would have to look at, is there any possibility of Euro GBP giving us a much bigger move? Because when I'm swing trading, I'm looking at the cyclical move, like not looking at 10, 20, 30 pips. I'm looking at several hundreds of pips of movement. So a movement like that would be from this level, perhaps down here. You're talking about 200 pips to the downside. And from a weekly perspective, what I'm looking at is the next major high time frame support level below, and could potentially be that level. But there's no clear indication of anything like that happening right now. So we're gonna move on. USD JPY. Now that we've been talking about looking at potential short on USD JPY for quite some time now, and I do think that we're seeing signs of. Actually, I don't really know what we're seeing signs of here. This is very complicated to trade, because I did see clear signs of a distribution up here, clear signs of a potential top, and then we had strength. We had strength with first this move, and then I wanted to short it here, but then we bounced up and came up and almost took out the highs here, and now we have strength again with this move up. So USD JPY is complicated. Not really sure what to do with that one.
I think it's very, very driven by the bond market at the moment. I mean, currencies are in general, of course, driven by the bond market, but especially dollar JPY, because it can take some time until this whole carry trade thing unravels completely.
Yeah. So I actually have to look into that more, because I know that when you and LJ, for example, you talk about the bond market in relationship to the yen and the dollar, I have no idea what you're talking about. So I really need to get a better understanding of that relationship, because I know that I think that's one of a key, something I'm missing in my analysis for sure. I have a question here. Sorry, go ahead.
What did you say? Because I was on the toilet just now. What did you say about euro dollar? Because you moved it up onto your probable trading list, right?
Yeah, just that we have a support here. I'm looking at potential long. All right, LJ, look at that.
Well,
okay.
Wait, hang on. I got the wrong camera. This one's terrible.
Okay, yeah.
Another one. This is a laptop camera. This is shocking. Hang on.
So yeah, Euro USD, we were just looking at, comes down to support, and then when it hits support, I want to go long. I just need some extra confirmation here. Not really sure exactly what I'm looking at, and if I'm going to be honest, I feel like it's not a good time for me to make a decision today. I just have that feeling that today's not the day to make a major trading decision. So I'm probably going to wait till tomorrow.
Yeah, I mean, I get it. I this morning I was also thinking like, oh, great, you start your new strategy today, like make it publicly, and then we had an environment that is so geopolitical driven, And
Yeah.
But I mean, by that logic, there's always something going on that would keep you from trading. I think as long as you have your risk reward in place and you apply good risk metric measurements and practices, then it's okay to trade. You can always trade with a lower risk than you usually do. So if you maybe risk 1% or 0.5% per trade. Usually nobody's keeping you from risking 0.1 or 0.2 or something like this.
Yeah, for me, it's trading. For me, is all about making sure I'm in the right state of mind. That's because I have now done this for 10 years. You have done it for even longer. I mean, when you look at a chart, you know what you're looking at. You know what you want to see. You know what if price action is telling you something, that you know what it's telling you. And I'm at the point in my career where I know technical analysis. Yes, there's a lot of advanced technical analysis tools that I'm still exploring and how to use it, but it's all about price. And I know what price is doing, and I can look at price and I can understand what's happening. But what I always need to be aware of, and what I always need to keep learning, is my emotional reaction to price. So could be, for example, okay, so Euro USD, oh my god, it's so good, it's at this support. What do you I'm supposed like support? I'm supposed to be buying. I need to buy this. I need to do it right now. It's new year. It's a new year. I want to have a winner going into the new year. Oh, it feels amazing. I'm just gonna enter this trade, and then I enter the trade. I enter with a little bit more risk because it's so obvious. And it's so obvious, and I'm so happy, and I feel so good about this that I completely ignored the where I should have had the stop loss, and then I get a spike down, I get stopped out, things like that.
It's so interesting that you mention this, because exactly Ashley and I, when was it last week, we're discussing exactly about this, because I found it so fascinating. She has her system, and in the morning she enters the trades, sets her take profit, sets her stop loss, and then just turns things off. And I said, for me, I've discovered, because I come from the more long-term trading or option trading, which usually is like 3 months into the future, and where I care not, well, of course, about price too, but it's measured in Greeks. And so it's a totally different things. And I was surprised how much I struggle with my emotions, especially when it comes to short-term trading. This is why I put so much effort into automating so many things, because it takes the one variable that is like very dangerous out of the equation, which is me. Because I know myself, I tend to take profit when too early. I tend to cut my stop loss or something if I do things manually. So even being in this industry for such a long time doesn't protect you from character flaws when it comes to trading. And there are people who can do that in a manual way, like Ashley can do that, like I believe LJ can do that, Victor can do that, I think you can do that as well, by the way. And there are people who cannot do that, which is me. And it's part of how you grow as a trader, in my opinion, that you see these are the things that I'm good at, these are the things that I'm not good at. And if I have things that I'm not good at, I need to somehow be able to take them out of the equation, or they are going to potentially run against me. Take your ego out of the equation. Yeah.
I'm going to show you a very good example
Welcome back.
Of this. What's up, LJ? Welcome. I'm actually gonna jump off now that Ajay is here, because I got my son at home, and I promised him that I'm gonna help him with lunch, because he's 8 and apparently he can't cook himself, which is I need to step up my parenting skills. Anyway. One thing that I wanted to show you guys, we're talking about psychology here, and you talked about how you have you find it much more difficult to manage your emotions on the lower time frames, and I'm the same. So when I'm looking at EuroCAD here, for example, I'm looking at EuroCAD and I'm like, oh, I like this for potential short, but I'm interested in, and this is exactly the same that you would do in the lower time frames, but the time frame different here is it makes all the difference for me. So I'm looking at this current candle, I'm like, well, you know what, the way that this candle is going to close is going to tell me a lot about EuroCAD. It's going to tell me a lot about where the trade might be going. So you know what? I'm just going to wait for this candle to close. And you look at this and you say it's going to close in 11 hours. Okay, so I have enough time to think about this. And then you go into the 1 minute and you say the same. You're like, oh, you know what? this is an interesting candle right here. I'm gonna make a decision based on where this close. Oh, it's gonna close in 50 seconds, and I'm
Yeah.
like, oh, I get so stressed because now I need to make a decision in 50 seconds. I need to calculate the lot size. I need to put the take profits in. I put the stop loss, and that's 40 seconds left. It's almost 30 seconds. I'm like, gonna type this all in, and then I press enter, and like, shit, that was too quick. And that's just such a good example of why, like, some people are just better suited to trade the higher time frames because of I get so stressed where, like, in stressful situations, I just don't function properly.
Which is normal. No, stressful situations.
Yeah, but some
Humans
people,
tend to make mistakes.
some people are really good at that. I
Yeah,
mean,
but,
some
but
people are
for
just
them, it's not
really
a stressful situation. Then.
no,
Yeah.
exactly. I mean, they might look at this and like, 1 minute, and it's like, it's a lifetime.
I
There's
need my
complete
3-second charts.
Yeah.
Chart.
No, but it's just such a different in time frame. LJ, hope you're doing good. Welcome.
Yeah, I
will
got
have to jump
my
off.
scrappy setup here, so we'll see how we
It
go.
looks good though, and I like the background. It looks pretty good.
Where are you, man? Oh, it looks like you're somewhere
I'm up on my
on Bali
on my
or
roof,
something.
actually.
On your roof.
I just got I actually brought up the camera this time, so it's a bit better.
So you still have internet issues?
No, not that. A bunch of other stuff, but yeah, I was trying to get it working down there and wasn't going anywhere, so came up here. But hopefully tomorrow we'll be back to normal.
Alrighty. Good.
All right, good stuff. I will see you guys later, right?
Take care.
Righty.
Take care.
See you, man.
Jonatan, and see
Ciao.
you. Bye-bye. Alrighty. So, how have things been for you? Happy New Year, first of all.
Yeah, Happy New Year. Good to see you, man.
Good to see you.
Busy as ever, still. Surprisingly.
Tell me about it.
I got a bit of a break, but still going. I thought today was Sunday as well, the whole day.
Oh, yeah?
Like my time is completely out of whack after after the holidays.
I just said at the beginning of his stream to Jonatan, I said, like, oh, my, LG is like super busy probably because the time span it takes you to reply to a message is longer than usual.
Yes.
So it's always a sign that he's like extremely busy right now.
Yeah, it's been a bit of that. So, but yeah, tomorrow hopefully should be sorted out. So
yeah, great.
What have we covered today? I assume you guys already spoke about the whole Venezuela.
Yeah, well, of course we did.
Yeah.
We had like I'm not going to say a political discussion, but my standpoint basically was like, when it comes to a trading decision, whether you should like go into a long or short gold trade right now, well, not really coming as a surprise that always the long side is to be preferred at the moment. But we were talking about, should we wait like for a setback to something like the 8 weeks moving average again, or is that something you need to enter now? And I said, when it comes to, let's say, staying in a gold trade for more than a week or 2-3 weeks, so more on a swing trading perspective, for me, that's an example, not going to say a good or bad example, an example of where you can base such a trade really on fundamentals. Because what is the chance? Are the USA going to stop, talking about whether it's true or not of invading Greenland, Mexico, Cuba? Are they going to stop about this, or are they not going to stop about it? Well, probably the latter, and that would mean gold is probably going higher at a rate faster than we might expect. So actually waiting too much for a pullback here. Not saying enter right now at this precise price, obviously, but like waiting here until all stars align again could be a mistake and potentially end up with us missing out on a lot of profit just because we were too stingy in entering right now. Maybe you see totally different.
I think it's interesting. I don't know how much further there'll be as far as I think a bunch of the other places a bit more rhetoric, stuff like Mexico, that kind of thing.
Yeah, of course.
Greenland, right? Venezuela kind of makes sense. Sense, if we want to call it that, you know what I mean?
Yeah, from a resources standpoint, like oil reserves and a lot of other commodities also where they are sitting on the largest reserves in the world.
Yeah,
especially when it comes to oil.
Yeah. Gold, precious mineral stuff. Again, it just adds that kind of war. What I haven't seen talked about so much is I think Canada is actually one of the biggest losers out of it, funny enough. So that comes down to the oil thing, because a lot of the oil in Venezuela, if they do that, it's very like heavy crude, right? Sour crude. And then in the US, we had the shale boom, right? So West Texas, they built all the refineries for that heavy crude for the processing. So then we had the shale boom, and that's produces now this what's known as like sweet crude oil, right? So in order for those refineries to actually hit max capacity, they mix the two together and get the medium balance. And they buy most of that from Canada. And last year, 2024, I've got the numbers. It was like 124 billion worth of energy that they bought from Canada, and majority of that was that oil. So if they can now get that from Venezuela, Canada potentially loses out that big portion there. So a bunch of those sort of Gulf refineries closest to Venezuela would actually benefit massively. So yeah, that was just an interesting side part that I hadn't really heard people talking about, which is another.
It's the first time I hear about this as well. This is actually very interesting. Yeah.
Yeah, because that comes down to more of the I guess troubles and pressure that Trump's putting on Canada as well. They got less and less sort of need or use for them, and Canada as well as now the new US state, right? Yeah, I don't know. There's all these weird games with this. I would say, as far as trades, like we're talking about gold, I wouldn't be making a full trading decision based on this. Not around something like gold.
Of course not. No.
Yeah, because I think it is. Again, it's one of those flash in the pan things. A lot of the stuff that keeps happening, like the market sort of.
What do you think about, like, I've read online, like people making statements like, seems like the world is getting divided by China and the USA right now. Maybe on a high level, they're talking to each other. Well, we give you South America or Venezuela, and in return, we are going to take Taiwan now.
I did see that. Yeah.
Which I kind of found funny. Normally, I would always say, like, oh, come on, like conspiracy theories, but in a like weird way, it kind of makes sense, to keep the status quo, because nobody wants an open war. Obviously, everybody's going to lose. They're too connected economy-wise as well, China and the USA. But to kind of like a, how do you say that in English? Like a tit and tat kind of agreement.
Yeah, tit for tat, quid pro quo type thing. Yeah. You guys play over here, and we'll play over there, and we'll just
everybody stays within their own region, do whatever you want there. We don't really care, and but don't invade us. And I mean, to the outside, they kind of play this power play. Of course, China, like Jonatan said in the beginning of his stream, China always respects somebody who appears strong, which of course maybe the USA are trying to do with Venezuela. At the same time, of course, China is doing things like, if the USA wants a war, they better be prepared for it. We can sink their aircraft carriers with our hypersonic missiles within minutes, basically. They can reach within 20 minutes any point in the world, and there's nothing you can do about it. So obvious, like brawling, not brawling, but like...
it's a bit of like chest beating. Like,
yeah, exactly. Like two gorillas in front of it, silverbacks in front of each other. Yeah. Exactly.
Yeah, I definitely feel part of the Venezuela thing was just that, like a sort of flex of power, flex of might to say, guys, we're still very much at the table. Like,
I wouldn't be surprised even if they align this, like, oh, hey guys, we're going to say this now, press conference, so we can appear like this. Oh, okay, we are going to put this statement out there. That they actually align a bit on this.
The other part is basically that, and then I guess the remaining one is then like Africa, and
Europe.
I mean, China's been trying to make inroads there for a long time, building up infrastructure, that kind of thing. Whether if somehow Europe starts taking more of a hand down.
No, Europe is never going to do anything. the German
But
Chancellor.
now once they get the kind of they get
he's
the
like,
military spend
when
up,
asked about the Venezuela situation, his statement was, "Well, it's like very complicated and complex." And this is like, it's very typical German. And like,
But
oh, we
we
better
just
not
don't
say
talk
anything.
about
We
these
don't want to
things.
offend anybody.
Yeah, for sure. That's it.
Mhm.
Yeah, how are we doing, guys? Hello to everyone in chat that said, "Hey, how are we going?"
This is a very interesting question. I think it's a palm tree. I hope.
Palm fronds. Yeah,
It's LJ's secondary income.
yeah, exactly. It's my new business venture.
I think cannabis
Oh,
stocks
man.
used to be very popular in Germany for a while, a couple of years ago.
Yeah, I mean, they were massive. They were the sort of pre-meme stock before meme stocks.
Yeah, exactly.
Before that term became a thing, right? Yeah, that was crazy at the time. I remember all that. But yeah, I don't know where they are now. I haven't looked up
I don't know. I never
any of those guys
as well. So whatever. Yeah. Did you trade anything over the new year between the holidays?
No. I switched out completely.
That's good, man. That's a good thing
off
to do.
grid,
Yeah.
off grid. So
anything you're looking at today? So
no, I'm just catching up. I've seen euro dollars definitely come off.
Yeah.
Pretty consistently, which I thought was interesting. Actually,
it's interesting because the stock markets are holding up quite well, in my opinion. So for me, it's more like actually a continuation of a risk-on environment, as weird as it is, with gold continuing upwards, stock continuing upwards. But I don't really see why right now in this environment the dollar should come under the rails.
Yeah, I agree, and I mean, yeah, we have gold going up, but we've had gold going up in this risk-on environment the whole time. It sort of seems to be going hand in hand. I mean, obviously, you got the government buying all the stuff we talked about last year.
Yeah.
Government, central banks, that kind of stuff. I think institutionally as well. Again, like we talked about, it sort of seems a better way to go than bonds at the moment.
Yeah.
Particularly with when you're talking about what kind of maturities they have to buy. Like they have the certain volume that they're basically obligated, to pick up. But then you're going to be starting to move some portions away from there. I don't know. It is very, very odd. I will say. I don't think anyone's quite got a full handle, but we're just kind of running with it. I don't know.
Yeah, I don't know where it comes from. Maybe it's like the oil trade coming in there, like, more oil now for the USA, so you want to be buying US dollar, whatever. I don't know as well, or it's really just everybody's coming back from the holidays. There's a lot been going on, so we see some repositioning, which is not surprising, of course, in the beginning of a year. So maybe this whole situation also in terms of price finding needs a couple of days to really play out as well.
Yeah, it's the same as some of the things with the dollar yen and the Japanese bonds with the rates there, right? I mean, that's been a really weird, thing. Like when when do you ever see that? I mean, the Japanese market as a whole for decades now has been a bit peculiar. We can put it that way, but these sort of base core fundamental pieces normally end up, tipping things one way or the other, and we've barely seen that at all. I mean, you can argue we're back off from 160, but hardly really, right?
But I mean, I think we talked like 3 weeks ago about this, like where we said like, oh, maybe we are seeing the unraveling finally, but it doesn't seem like this. There seems, I mean, there's a decade of raveling, so it's not going to unravel as it seems within just a year now. But of course, they naturally should, because we see Japanese bonds trending higher as well, the yields at least. And I mean, at one point it needs to be tipping, really. I'm surprised, have been over and over surprised since July last year that it did the price development it did, but at one point it needs to break. But that's also the thing, if somebody, something that has been going on for such a long time, it doesn't just break like this. It's so hard to bet on something like this. This is it's like betting on the stock market crashing. Eventually it's probably going to crash and go down by 10, 20, 30%, but betting on it, you are bound to lose for a long time a lot of money, and it's questionable, are you going to make up for that money and get your return on investment when it finally happens?
Yeah, exactly. So I don't know. I think, it might be exactly that when we do see stock market come off. I think everyone's looking for that, at some point. Again, like you were saying, and everyone's been talking about it for the past, 6, 7, 8 months. And then hence such heavy eyes on stuff like the Fed and jobs and everything going on right now. But
by
we're
the
in
way,
this weird.
Sorry to interrupt you just quickly, but my new trading system just triggered 3 trades. As I said, it always does it 4 hours before the New York cutoff for option expiries. So currently, there are more coming in. As I see right now, we are short Aussie dollar, long dollar cut, long euro yen, long euro pound sterling, and short euro US dollar. So the system is going to hold on to these trades now until 10 a.m. New York. So that's in precisely 4 hours from now, and then close the trades. So we're going to see then on Wednesday, this is when I'm on the next time, how the outcome of these trades are.
Beautiful. Very nice. Very nice. So you'll hold that till New York?
Yes. 4 hours before New York cut. It's going to engage based on, certain things that I am not going to share here, obviously. But as I said in the beginning of the stream, this system passed in a very good way, I should say, all the obstacles I put in the way. So I'm not just backtesting and forward testing stuff. I'm doing stuff like measuring the p-value. So what is the chance that I just got lucky in this backtest? Ferroni measurements, measuring like if I do 200 backtest and I found a strategy, it needs to be 200 times as good as the single strategy I found, and it passed a 30% decay or a 30% cut off I did on the performance, and it still was very profitable. And that's why I said in the beginning, this is a system that's now live on a high stakes account, and I want to see in a very open way, to share this with everybody. Is this system able to generate money to pass evaluation and go into funding, or is it still something that is not working in reality? To kind of show like where are the difference between testing a system and then using a system in an automated way in reality. So pretty excited about this, and as it seems, found a lot of trades. I need to check if it really took the trades also on the MetaTrader.
Yeah.
Which it did not. Why didn't it do it? Okay, let me quickly go offline for 5 minutes. I need to investigate why it didn't.
And try and figure out.
Sorry.
Okay. Let me see if I can get screen up. I'm on one screen right now. I don't know if that'll work. Hang on. I have to bring this separate. Righty. Here we go. All right, hopefully that's up. Let's swap over. Alrighty, how we doing? So, like I said, I have not looked at charts at all. I tuned out. I still need to clean this up. I'm going to do that this evening for you guys. We'll start this year fresh with the new Picasso drawings from last year. But today, I think gold's the number one, like you guys were talking about before. I was looking at these levels up here, either for a break of that and continuation, or we actually continue the down run through here. So if you guys want me to quick look at some, what is this doing? I look like I'm growing a tent. Growing a tent? I mean, my lovely flowers behind. Hang on, let's see if Dirk will come back in a sec. My screen is not working. Come on. All right, hopefully you guys can see that. I can't tell if you can see that because I can't see the actual screen when I pull this up. But so I can't see you guys' comments either, which is not helpful. Maybe if I can put this to the side and put this over here. That kind of works. There we go. I'll have to do for now. Oh, terrible. Kalman trend indicator is pretty cool. Yeah, it's pretty handy. It's a neat little indicator. It's just the like big beluga one for any of you guys that are interested in that. So I think we've spoken about before. It's kind of just a more advanced sort of momentum indicator with your moving averages. So, but gives you a nice little outlook once that shifts. You can just tap on one of these, outlines your support resistance, where you crack that, you run through, and you see when the trend shifts just there. So, but yeah, how are we doing, Akram? I saw your comment before. Good to see you, bro. Good to see you. And morning, LJ. I think the stock market is being held up because if it crashes, it makes the US look weak. If it crashes, yeah, definitely. I mean, obviously, Trump, he hasn't done it so much this time around. Maybe he's been warned against it, but just like in his first presidency, all he ever spoke or tweeted about was the level of the NASDAQ and the S&P. So, yeah, I know you guys will probably get heaps of the background noise from the road down there, so apologies for that. I got my scrappy set up today, so we'll be back to normal tomorrow. Yeah, they clocked me. Mate, you guys dubbed me in. What's going on? I'm going to collapse my new business before it's even begun. How are we doing, DJ? Good to see you, man. Happy 2026 to you and your family. Hope you're well. Also, compliments on the greater Fibers community. Thank you, brother. You too. I hope all you guys had a great New Year, great Christmas, however you spent it. Christmas or holidays, whatever you guys do your way. So ready and prepped for a new year. We got 10 years of Fibers this year actually as well, 2026. So what's the sub count for the stream now? Because if we can get that to 100K this year, that would be good. Where are we at? 94. So we need another 6K. We got to get that this year for the 2026 10-year anniversary. Alrighty. Let's cover some general stuff. So we'll have a look at the Dixie first. Let's go and hide all this junk. Alrighty. 1 hour, 4 hour. I mean, we've got this double top through here, probably looking a bit of a pullback. I'm not confident on the exact direction. I don't like this euro dollar move down through here. This feels more like just lack of momentum to the upside. It doesn't seem to be any clear directional reason for this. I haven't checked bond price differentials today, rate differentials, but I would say this is just basically just pulled back into support through here. Lack of momentum to the upside. Easiest way for price. We've had euro pound, I think, coming off today as well. So that often when there's no clear further direction, euro pound will end up driving euro dollar and pound dollar. What else do we have? Let's NASDAQ. Actually, what we can do even is I'll bring up. Do I have it on here? That's the question. Maybe yes. I have this stuff saved. Let's have a look. Here we go. All right, the good old expected move for the NASDAQ today. Let's go have a look. All right, so we're sitting at 25,213, which is a touch lower from where we are now. And that's right in the middle of this range. I don't particularly like that as a trade today. Normally you get some good structure through here, but that said, this is on 4 hour though, actually. We'll bring this back down to 1 hour.
Looking at NASDAQ or?
Yeah, I was just looking up
Yeah.
the distribution range for today. I'm so limited on all my stuff for my setup here. So the same thing when I bring this up, I can't see chat or comments or anything. So it's been a bit difficult, but I still think we are due a bit more downside. I want to see this kind of a move, right? We've got this kind of wedge forming through here from those tops, these bottoms up through here, but I would like to see more downside first before that upside move. I don't know how confident I am this year of seeing that much progress on the S&P overall. Let me maybe go back to your chart, just because this is giving me a headache here, trying to make this work.
Just tell me what you want to show, and then I'll bring it up.
Yeah, that's much better. Okay.
So I repeat, by the way, my trades now are executed also on the MetaTrader automatically.
Oh, yeah?
So have to investigate why there was such a delay. But, that's to be expected for the first time doing this live now.
So it did still go through automatically. It just was delayed.
It was delayed in one case, which was Kiwi versus US dollar. There is like a different order fill that is needed on the MetaTrader, immediate or cancel instead of fill or kill. And but I repaired that now as well. So everything is looking good. Running some tests here. What do you want me to show? NASDAQ or?
Yeah, I guess. Yeah, I was just going over. So had a general quick look at the Dixie. I didn't see anything there right now. I don't really 100% believe is the wrong word, but I think the move today in euro dollars sort of just lack of momentum to the upside. So you just sort of waft off. I don't think there's anything in it. So as far as looking at the Dixie, it's a bit distorted, I would say. Dixie itself, nothing great.
The thing is also in the indices, I was a bit surprised. I expected that we are going to have more of a year-end rally. It felt kind of like that we did, started that before Christmas. And then like the last days, it was kind of a sell-off again. Not sell-off, a bit dramatic maybe that phrasing it like this. But in a year like this, with this dramatic performance in US indices, I kind of expected that we at least end on a high note.
Because just before Christmas, we had some of the biggest single-day inflows as well on the long side. And then we did make a bit of progress higher, but then, it just got stunted.
And maybe that was somebody fading, the general opinion about this. Because I saw this was like a lot on media as well. Year-end rally, window dressing, we talked about this as well. But it kind of had like a lackluster. I said last week on the 30th, on the 29th, I said, like, if I have to bet on a position, which I'm not going to do because I'm in holiday mood already, it would be long. And I couldn't have been more wrong with this one.
Yeah. This is my trouble this year is that I don't know how much better the AI story gets. And if that isn't there, what other driver do we really have?
It's surprising to hear that from you, because I remember beginning of December, you were still like a bit more optimistic. If I remember correctly, saying like, oh, probably like first quarter, maybe second quarter, we are still going to see positive markets. Has that changed? Is there something that made you like change that, or are you just like saying like, oh, the momentum that we saw over large periods in 2025 to the upside is not going to be that extreme anymore in 2026?
Yeah, it hasn't quite changed. It's still there, but it seems like the exuberance has sort of died down a little bit, and so it was very weighted on, yeah, like you're saying, that momentum of that positivity really sort of sustaining. And even though some of these sort of questions or dubious bits and pieces with the AI story have sort of been, everyone's gotten over it, or it's not so bad or whatever, that sort of positivity hasn't really come back, and the slight negative tone is sort of sticking. You know, so whilst we do get the liquidity, that kind of stuff coming in, I think we might get some more highs, but I was looking for a bit more exuberance, kind of a blow off top, and then we come off heavily. Right now, assuming rate trajectory goes the right way, market's happy with the new Fed chairman and how the committee sort of conducts itself and communicates and everything going forward, then I think we'll sort of plug along, maybe with some general highs. I'm kind of now feeling like we'll get a sort of bit more of a sideways to up chop, and then not really make that much progress, right? It kind of just a sideways year overall.
I mean, that has been kind of my hypothesis for 2026. Anyway, this is also why I gradually every month sold stocks and cryptos in 2025. Many too early, of course, but overall was a very good year, obviously, for my long-term investments. And I've talked many times about this presidential pattern, where 1 year after the election, it's not we are crashing the markets, but it's more a time like you are describing right now, where things go a little bit sideways. Volatility is a little bit slower. Things are not really progressing. We might go up 5%, go down 10%, just to go up 5%, and end up where we started again. So kind of dulling people in, making people like slow until then. Probably early fourth quarter, things are going to pick up again. This is right now my hypothesis. Is my trade, long-term trade execution plan, position executing plan for 2025. And yeah, I still don't see anything, proving me wrong with this opinion.
Yeah, I would have thought with some of the, the sort of light QE light stuff that they pushed through, that would have had more, I guess, more positive, sort of backdraft whenever we get QE. I think the fact that they went in a lot heavier than the market thought has posed a lot of question marks around this sort of stuff. There were a couple of the repos as well, just before New Year, that actually came out pretty heavy, like upwards of 30 billion for a single day.
Really,
yeah. The Friday after Christmas, I think, was like 17, or the Thursday was like 17, then the next day was 20 something, and then just before New Year there was a $30 billion day. Something like that, and these were in succession. Everyone's going, okay, that's these are not small numbers. So I don't know if that's part of some of this stuff going on, where there's these underlying concerns that we've gone, it's sort of been a bit of a backdrop thing with private credit, all this kind of stuff, banking situation, and we sort of talk about it for 5 minutes and then it goes away. But I don't know if that's sort of a little creeping thing in the back of people's minds before just deploying capital. Or same with the Christmas rally, sort of going like, okay, maybe just wait a little bit.
Yeah, I mean,
I'm not quite sure. I can't quite put all the pieces together yet. It's peculiar.
No, I think that's a good thing to say and to admit something like this. First of all, because I also cannot do it, and I think alongside the two of us, if you look at like a lot of fund managers out there, not saying like the ones that have like billions of asset under management, but the rather small ones, maybe, the hedge funds that has like 10 or 50 or 100 million under management. I think they are struggling with the same at the moment. At least that's the notion I kind of get if I I did my New Year's calls, obviously, with my network, and like the people that work in more institutional positions, they were all, with one exception, maybe, all kind of like, I want to wait first. I want to see the other participants in the game of chess make the move first until I decide what I'm going to do. So maybe it's going to be a little bit a game of patience, but we're going to see a rather boring January until somebody comes, and makes it kind of put us in the direction.
I kind of feel a little bit like that with the FX market as well. Both with Euro, like, everyone's sort of looking towards that 120. I don't think there's that much legs above 120, but it's still, you sort of look at 114, 113, you kind of go like, it's not quite right given the other surrounding parameters. And then same thing with dollar yen. I don't know if, it's just you don't want to end up punching it before everyone. You want to see it coming off, but everyone's doing the same thing. So
that's the thing, really.
I don't know. Yeah. We'll see how.
It's obviously consolidation, up there, but it's like, where's the momentum?
And I feel like saw the opposite in gold. Once it did run, everyone wanted to jump on the train, and there's this kind of crowding effect. Like that, and then the same way. Yeah, no one. Everyone's sort of very uncertain, not wanting to get their hands burned, right? Obviously, and we've had a very odd. Last year was very odd, back and forth with all sorts of stuff. So, I guess it sort of makes sense. And then now people, I don't know if it's a bit of fatigue as well with all of this, right?
Maybe it is.
Government shutdown, lack of data. Yeah.
Maybe it is, and the data coming out is dubious, to say the least. I don't know if I can trust the data really still coming out of the USA. But yeah, it can be fatigue. I mean, I don't know about Australia, but here in Europe this year, the Christmas holidays were like very much in favor of being employed, because Christmas Eve was on a Wednesday, and in Germany at least you have like off on Thursday and Friday as well. Maybe you take off Monday and Tuesday, so you have a very long. You spend a very little amount of PTO to get like 2 weeks of holidays, and I can imagine like people are still fatigued, coming in like, oh, I have to work again. They're not like us, I was like already like 29th, 2 more days, then finally I can go back to the office, start trading again.
No, exactly. Yeah, I think we got to wait through this month's data. I think once we get through there, did we have the Fed chair announcement at all over this 2 weeks whilst I was hardly paying attention to anything? I don't think we did.
You're asking questions I cannot answer. I was like either like spending time with my family, or I was in my own world of coding, and so I really didn't pay very much attention. Eren, welcome.
Hello, guys. How are you?
How's it going?
Good to see you, man.
Good to see you.
Happy New Year, guys.
Happy New Year, you too.
Pleasure to meet you, by the way. I think this is the first time.
Yes, it is.
Pleasure being on one stream.
Yeah, I've been with Dirk before, I think, but I've not been on a stream with you yet. No.
Yeah.
Very good. How are you doing?
Yeah, good.
You are charged up with your batteries after the Christmas and New Year's break?
Yeah, ready to go, man. I was just waiting for this week to start, honestly.
I just said that to LJ as well. I was like, come on, it's too long now. I want to start again.
Yeah, like 1 week is enough, but 2 is just too long, man.
This is how you know that you have chosen the right profession.
Yeah, exactly.
Any trades you're in at the moment? Anything you're looking at?
Yeah, I'm in a EU buy right now.
Yeah.
But it's a high risk trade for me. So
want to share your screen? Or?
Yeah, 100%. All right, let me just do that real quick. be able to see my trading view right now.
Euro dollar, you said you're in.
Yeah, Euro USD.
I don't mind euro dollar from here. Mention it briefly because we've come down. It's basically touched the top of some of those previous highs, right?
Yeah.
I would call it, like you said, sort of high risk. Like we might have a bit more in it, but I don't mind it from here because
For me, this is actually very
don't
nice.
feel like
Here. The alignment between the support bands, 8 weeks moving average. I think we could see a potential bounce there. Nothing I'm trading right now, but
So for me here, on the higher time frame, I am still bearish on EU, but the main reason I decided to risk it is because we got a lower time frame set up here. I'll explain that in a second, but the dollar just looks so weak to me. And when the dollar goes down, that means Euro USD goes up, usually, obviously. So we got a 12-hour sweep of this swing high. So my bias on the higher time frame on the dollar is bearish. And then when we drop down to the 1 hour, we have a breaker zone here for sells, which is my setup when I take a trade. So you sweep a swing high and then you break below a swing low. So I expect the dollar to go down off the zone as well. And then the only downside to this is that GBP is stronger than Euro at the moment as well. So I only took this on some challenges that I am very happy to lose on. Nothing else, just some challenges that
that's that's a thing to put it as well.
Yeah. Like I have multiple challenges, and some I'll approach aggressively, some I'll take the right trades on only. So if this loses, I am fine. But I'm expecting a push up off this zone. If it doesn't happen, then it is what it is, right?
Yeah.
How much, if you don't mind me asking, how much do you usually, when you do like challenges, like you just said, you don't care, you want to be a little bit more aggressive?
Yeah.
What is like your risk per trade or your risk approach there?
At least 2 to 3% on challenges.
Oh wow!
Yeah,
that is really something. That is really.
Yeah. It's heavy. But
I always think like when I do like 0.5%, I get like
no, I'm very
high blood pressure and think, oh my God, what are you doing? Are you crazy?
Yeah, I'm very aggressive with it. Hi, Richard. How are you doing?
Richard, good to see you. Happy New Year.
How you doing, Rich?
Happy New Year, man.
You're muted.
I am muted. Nice. It's 1-0 for you guys. How's everybody?
Good. How are you doing?
Good, man.
Good start to the year. Got a nice little holiday rest. Short, but it was good. Started the new year with a fresh incentive to to hit the markets hard and just do other things as well. Like get fit again. So I went to the gym this morning.
Wow.
Which felt good, surprisingly good. So we'll see if I can uphold that for the next few months or so. Start becoming a swoleless Doc LJ up over there.
Dude, I went for a run today in the longest time. I haven't done like proper cardio. Man, I was dead. Tried to go for a 10K and just died. It's like, why did I start here?
And not doing cardio for a long time and then immediately doing a 10K. I mean, that's maybe a bit over the edge as well.
Yeah.
I also want to stay healthy this year, so I walked to office today. That was my cardio.
Nice. How far is said walk?
Yeah, that's about 5,000 steps. So it's a bit of distance.
That's good.
And I also have my new walking treadmill underneath my desk. So every now and then I'm going to put up my desk and when I'm going to walk like for 20 minutes instead of just sitting on my lazy ass all day staring at charts and gold.
That was my thoughts exactly for getting back into the gym as well. So early morning, got up at 6, was at the gym like 6:30, somewhere around there. Got up, got dressed, went. Came back an hour later, thought, I'm going to suffer today. Nah, actually not bad, not bad. So I don't know if that's like the calm before the storm kind of like thing where tomorrow morning when I wake up, I can't walk.
Probably.
Yeah.
That's tomorrow's problem. That's not today's problem.
But I mean, how is that in South Africa? You know, because one thing when I lived in Singapore, which what I very much enjoyed is like every condo has like a gym, has a swimming pool, and has like workout facilities basically. So the obstacle of in the morning getting up half hour earlier, you know, going for a couple of lanes of swimming or lifting some weights or getting onto the treadmill is much lower. Here, if I really want to work out, I need to go to a proper gym, which is like 20 minutes of a drive from where I live. So of course, like me saying like, oh, you know, I'm not going to do that now. I'm going to sleep longer. Is like much higher or the likelihood or than me getting up, getting into the car, driving to the gym, working out there, getting back, showering, and then getting into office.
So it depends here in South Africa. If you live in an estate or like on a golf course or something like that, they generally have on-premises gyms, usually pretty well kitted out. But I don't live on an estate. I do have a swimming pool at home, so I can do lanes if I want to at home, but I generally have to drive to a local gym to go and do whatever I want to do there. Now, what you just mentioned, I have to drive 20 minutes, then drive back down and kind of like thing. I view it as like one extra step. So I get up in the morning, I get dressed, I drive to the gym, I drive back.
So basically, you have just proven that I'm just a lazy ass.
Well, those were your words, but if that is how you view yourself, then yes, you're a lazy
you
ass.
know, because it's like I said earlier, as a trader, you cannot have an ego, you know, otherwise you're going to lose money. So in general, in my life, I cannot have too much of an ego as well. I need to step out of my comfort zone.
Exactly, that's kind of like the thing, and it's the same with after an exercise session, you do like a cold plunge or something. That's just you getting comfortable with being uncomfortable, because doing a cold plunge sucks. Nobody enjoys it, but it's part of it. It's that mental challenge, like, oh, this is gonna suck, but you're gonna do it because you know that it's gonna be good for your muscles afterwards. So you just kind of do it. Thank goodness our swimming pool, it's summer in South Africa at the moment, so our swimming pool is, I don't know, like in like mid-20s, I would say. So I went to go and visit a friend over the Christmas period. Between Christmas and New Year's, we had our Friendmas, and they have a heated pool, and I think the pool is like 33 degrees or something like that. Wow. Yeah, but if it's contrasted by how hot it is outside. Like outside is like close to 40, so it's just like it's much cooler in the pool than it is outside. So
it's here we have 30 centimeters of snow and it's -7 degrees. So I'm not going for a swim outside today.
And still, you're standing there in your office without a jacket, short sleeves, all happy and comfortable.
Yeah, thanks to the modern wonders of heating.
See? Heated pool, heated room. It just makes everything better.
That's true. All right, guys. So I'm going to enjoy my lunch now and going to eat some really nice low-carb, very low-fat lasagna. And yeah, going to see you again next Wednesday, I believe. And going to leave you in the capable hands of Richard, Eren, and I don't know, LJ still staying, or are you off?
I'll probably dip out. Also, seeing as I'm kind of useless today with this setup, so I'll see you guys tomorrow.
Never use
properly.
It,
everything
never.
Back to normal.
Nobody is here.
This is the tiniest laptop screen ever. Like, I can't see anything.
I kind of noticed when you shared your screen. It's like, oh, what is this? A screen for hands.
Yeah, exactly.
Why is your setup still not fixed, mate?
Oh, a bunch of whatever stuff. I'll tell you on Friday if we play poker. But
all right, cool.
Yeah.
I'll wait for you then on Friday for the lowdown.
No worries. Yeah.
All right, Dirk and LJ, you guys have a good one. I hope that the first few days back into the January market was kind to you guys.
Indeed. Keen for 2026. It's kind of good. So
let's go.
Time to get ready.
Bye-bye.
Take care, guys.
Thanks, guys. See you
Bye,
tomorrow.
LJ. Eren, what's up? I see you and I have to we have to get familial with each other, seeing as Will is decided or has decided he doesn't want to join us. He wants to move to another country.
Yeah, wow. He moved to Hong Kong and that. Nice.
Yeah, he's flying tomorrow. So
Oh, he's not there yet. Okay, I thought he already left. Okay.
he's in packing mode. So he's just like
Wow,
absolutely
okay.
stockpiling everything he can. How was your holiday season? I don't know if you celebrate Christmas or not, but if you,
It was good, you know, it was good. It just felt like it took a little too long as well, because you know I was just ready to get back into it, and it just wouldn't happen. Also, I was waiting on a payout, and it was so delayed because of the holidays, and then I finally got it today. So yeah, I'm happy to start the week like that.
oh, dude, that's always a great feeling. Like, especially if you wake up and you get like that message like halfway through sleep, and you're like, and it's just like money in the account. It's like, oh yeah,
Yeah, I know, it was so nice. Yeah, but yeah, great start to the year. So
So I heard you said that you were in a euro long.
yeah, I'm in a buy right now. It's not a plus setup for me at all. It's more of a high risk setup, but I obviously only took that on some challenges. So yeah, man, that's it.
So what do you generally aim for? If you like, walk us through what is your typical risk to reward? What is your typical let's say non A plus setups? How would you approach that one?
Well, for this one, for example, it's a lower time frame one, so my stop loss is less wide. So here, I would definitely go break even at a 1-to-1 and still hold it. Once we hit a target, like let's say Asia high, or there isn't really any clear targets for me at the moment other than this market structure high, and that is very far. I'm not going to hold all the way up there. So once we reach Asia high, I'll probably go break even, and then I might close the trade out if the dollar tags any lows or something, or raids any lows. So on this trade, it's just not really clear. But usually I'll target a 1-to-1. And if I'm on a live account and I hit my 1-to-1, I'll just close and get my payout. If I am on, let's say, a challenge, I'll hold it longer because I need a high amount of percentage, right? You need a big profit target. So it always depends on what trade it is and what account I'm trading, you know?
Okay, so your risk profile is more catered around individual accounts as well as the specific trade itself. So you don't approach every trade the same way.
No, not at all. But usually it is a 1-to-1 when it's an A plus setup, because they're higher time frame.
Okay, so is this based on back tested results? Your
Yeah.
Or okay, all right.
Yeah,
so have you tried any other risk to reward ratios?
Yeah, I've tested a 1-to-2 on the lower time frame as well, and that works very well too. But I'm just more of a, like, I get very frustrated sometimes when I'm up a good amount because I risk high, you know, and it ends up going back down. So that's why I've made that rule of going break even. Well, tested it out obviously, and it works well for me. So I'll go break even at a 1R, sometimes at a 0.7R, because that was like the best statistic when I back tested it. But it's a bit too precise for me. So yeah, I'll just base it off that. And if it's a challenge, let's say, I don't mind losing the profits. But if it's a live account, I'm at a 1-to-1. It's kind of like, why not just take it, right? So yeah, that's kind of it.
Awesome. I have literally just taken taken profit on a NAS buy. So
Oh, nice.
yeah,
Good job.
I've literally just it now. It doesn't look it here, but it's wicked slightly above this point.
Yeah.
There's a little bit of spread, but I got, and I also do 1-to-1 risk to reward ratios on NAS during the London session. Sorry.
Right. Yeah.
I primarily trade the 5 and 15 minute. So in general, I'm not too bothered by what happens on the daily, as an example.
Yeah.
But I have noticed on NAS that we have this very, let's not call it tight, but this tightening of the range itself. So we have, this is on the daily time frame. So the highest point was October, the end of October. And the lowest point of this basically range is November the 21st. So high point, low point, we're making a lower high, but we're also making a higher low, and then yet another lower high, and yet again another higher low. So we've got this constricting band at the moment that it looks a little bit like a flag. And I heard that LJ and Dirk were talking about what their expectations were for like the first few days of the 2026 calendar, to see whether or not, you know, are we going to see like the indices absolutely rally and that kind of like thing, you know, the Christmas rally and stuff like that, which you didn't really see. Christmas ended up being not Christmas, but like December ended up being a very slow upward kick in the beginning, and then quite a sell-off, and then a slow upward kick, and then a bit of a sell-off. So I kind of agree with them with the sentiment that we're going to get this very slow kind of like trudge a little bit, and I don't think it's going to have your typical flag break in one of two directions. I think we really need some sort of impetus that really drives the market, really forces it in a direction. As it stands right now, it's very unappealing, I think, for a longer term viewpoint.
Yeah.
I'm very much a momentum based, and I follow like just regular price action, just higher highs, higher lows, that kind of like thing. And this to me is very unappealing. This to me is worse than just pure sideways action, like just you know, straight up consolidation. You know, that to me it just really sucks seeing this, because just when you think, okay, it seems as though on the, you know, going down to the 4 hourly, okay, we're getting close to an area now to maybe start pushing up, then we get like volumetric push lower, and that's why I just go down to the lower time frame and I just sit here. So it sucks for me. I meant like in higher time frame, like trying to like establish where I think price might be going. But for me, lower time frame, more than happy with it.
Yeah, I mean, it looks like a nice trade. I was personally bullish as well coming into London on NQ. Overall, in the higher time frame, I do think we could push down. But that doesn't really matter to me either, because I trade futures on the lower time frame too. Now, I've decided to start getting into futures prop firms as well, because I just got a payout. So I used some of that to get some accounts. And then we'll see how that goes, right? Kind of new to it. But I know that my trading on NQ works. I've tested it for the last few months. So I'm going to test it out and see how it goes. I don't know if you're trading it on a CFD account, or are you trading CFD? Okay. But yeah, I'm going to test it out on futures. And then hopefully once the Fivers release futures, we can test it out over there as well.
Well, I've been considering the idea of looking at futures and then just sticking to NQ, just going NASDAQ all the way, because I've reduced my assets that I kind of like look at to a singular asset, which is NASDAQ. So I'm just going to focus on NASDAQ and see if I can master without mastering it, like just master how it moves. I've already gotten to a point where the whole of last month, December, on one of my accounts, which I traded a little bit differently. I have a few accounts, but I do trade them a little bit differently. I trade the London session one way, and then I trade the New York session a different way. And the London session account hasn't lost the whole of December.
Oh, wow. Okay.
So I haven't lost the trade on that one as yet. They've played out. I've had... On the New York session, I think I'm just coming off of a 3-day losing streak. So
right. So then you're sticking to London more, right? No?
So no, both actually. So just on different accounts.
Right.
So
okay.
this was my London account. I had a trade during... I just came off last week Friday off of a sell over here. So which was a 1 to 2. This is on the 5 minutes. So
Yeah.
not exactly in on that candle. It was a little bit lower, but on this candle, it took my take profit. So, but before then, I had 3 losing days in New York.
Okay.
So took a loss.
Sorry
took
for
another.
interrupting.
No.
Do you trade the same thing when you trade the different sessions, or do you have like 2 strategies for 2 sessions?
So I mainly trade one of 2 strategies, but sometimes the 2 strategies kind of like intermingle.
Oh, okay.
So you can almost think it's like 3 strategies. So I have a rally-based rally, drop-based drop strategy that I use for when we are in trending markets. So generally, this would be a drop-based drop. So you have the high of the session. So this is just a sessions indicator. This orange part is New York because Trump, and then the blue one is London.
Yeah.
And then the pink one is Tokyo. So generally, I wait for the open of the New York session to kind of like the first, let's say half an hour to an hour. I don't do an opening breakout whatsoever, but what I do is I want to see what is the general feel for NASDAQ during the New York Open. So I'll wait for the New York Open to kind of like see what it does, and then I wait for either a significant high or a significant low to be taken. In this case, there wasn't really a significant low to be taken just as much. We did have the Tokyo high that kind of had like a little bit of an idea to it. There was a reaction once and then kind of consolidation. So that first got taken. So, but not strongly. It was supposed to kind of like dip through. It was supposed to dip through, but it didn't. But what it instead went and did is it went and took this high from the Tuesday, and it broke through that high point and then kind of started dwindling lower. So that's what I look for. I look for a significant area to kind of like be swept, to say, I want to try this area, try it and fail. And then I'm looking for the failure. And then I mark up areas to say, okay, this is a high point as an example, and that was the recent low. I wait to see which one gets broken and taken first. So in this case, fortunately, well, it doesn't really matter. In this case, it started pushing volumetrically lower after the New York Open, which to me, after it took a significant high, which was a previous high point a few days earlier, just volumetrically pushed lower. To me, it's a signifier that price wants to carry on going lower.
Yeah.
And then all I wait for, so this is now the establishment of a new trend. To me, it's a downward trend that gets established because we have broken and closed lower than a previous low point. In this case, this whole section becomes a drop. So this whole candle section, that is a drop. Then I look for a base. A base is the opposite direction to the established trend. So this is where I usually talk about like arm wrestling. So bulls and bears are like wrestling a little bit, arm wrestling. And then, the bulls are kind of like pushing the bears back. But then that second wind comes in and they push them through. And that's generally this area. That's what I call a base. And then this follow-up candle is then the establishment of the next drop. And then based on this, I would enter on the close of this candle. So that is just a drop-based drop. And then the inverse is then a rally-based rally. So I would generally use this for New York sessions. And then what I would do in in London session is I would look for something in this regard. So we have a high point over here, I think coming out of Tokyo, high point. We have a low point just before I generally don't trade in this area. I generally trade in London session itself. I wait for one of these two to be taken, either the high or the low. High gets taken. I look for the most recent significant area, which in my case is usually like a Tokyo high or Tokyo low. And then I wait for price to come back to it. And then from there on, I want it to start reacting a little bit more bullishly. Yeah. So in that case, we had this last attempt to push price lower, like strongly, which failed right at this area as well. Price started pushing up. As it breaks, I just enter with a 1-to-1, and these are usually static. So it's a static 40-point stop loss or take profit.
Right. And this trade ran for a 1-to-1, right?
Yeah, so I got in my time just like 10 minutes past 12, and it's about an hour and 20 minutes, hour to 25 minutes. It's a bit slow. I think in general, my London session trades is about 45 to 55 minutes a trade.
Okay.
And then my New York ones are very fast. They're generally like within 20 to 30 minutes.
Yeah, New York would be faster, yeah. On the open, it's so volatile as well. Like, that's the thing that I like a bit more about futures, is that it moves quicker and your trades don't take as long. And you also, like, on the challenges in futures, you don't stay on them too long, you know? That's something that I really don't like, is just being on a challenge for too long. Because that time that you're in that challenge phase, you're not doing anything, kind of, you know? You're kind of just, I mean, you're not wasting time, but like, if you're on a challenge for 7 months, I feel like that's just a waste of time. I'd rather pass it or blow it in the first month or two max, and then move on to the next one. You know what I mean? So that's what I
get that.
like about the futures model.
So the futures model for you is it's in and out. It's done and dusted.
Yeah, like I want to pass it or blow it in a week max.
Okay,
Yeah,
that's a bit crazy to me, because that means that you're going at least 1% per trade, which is normal, which is like it's a typical risk sizing for most people is 1%. But then that means that you're full sending effectively after 5 days you're done.
Yeah. But the thing is, like, sometimes it'll last longer. Obviously, if I see that the week is bad and the conditions are bad and the price action isn't there, I'll obviously not take anything. So I won't just randomly enter anything, obviously. But like, if there is a setup, I will enter with a good amount of risk and just try and at least get half the target, and then the next trade do the same. And all you need is two trades then. Obviously, you can lose two trades in a row easily, but if you win them, you're done, right? Um, if you just keep risking like 0.5% and you're taking like 20 trades in 4 weeks and you haven't gone anywhere, you need to repay for the challenge to reset, because you only have a month, right?
With futures.
Yeah, it's not like CFDs. CFDs, you have unlimited time now, which didn't used to be a thing either. It used to be like 28 days, if I remember.
Yeah, you usually have like 4 weeks or 30 days or something or
Yeah.
1 month to pass the challenge. But
Right.
they've allowed people to kind of like extend that, because there's a lot of people that have very slow, very methodical
Approaches, yeah.
approaches, and sometimes it's just not to for everybody. But like that's
No.
good.
Yeah, 100%. But I feel like my approach into the prop firm space might sound a little aggressive to some people, but like, once I am on that live account, I'm so good at just getting consistent payouts. So that's why I want to get there as fast as possible, right?
I mean, that's fair. That's like that's your viewpoint of how your system integrates into trading.
Yeah.
And so long as you're comfortable with what it is that you are doing,
Yeah.
and you're happy to continue doing it should it go wrong, that's your baby. Like it's your
Yeah.
approach to it. And I'm firmly of the belief that there's no right or wrong way to approach trading.
No, I agree with that so much, because everyone does something different and can make it work. So I agree with that.
But I think a big problem comes in when people are trying to emulate what other people are doing, and they don't understand the nuances, they don't understand the reasonings, they don't understand what it is that person was specifically looking for. Even though I can teach you, I can tell you, okay, I'm looking for a this and a this and a that. It's like you're forcing yourself to try and understand someone else's thought process. And I mean, like, how many arguments do you get into with people that you know for the longest time just because you're like, I don't understand you sometimes, you're such an idiot, you're thinking like this and your reasoning is this. How do you expect that from a complete stranger that you've never met, and now you see their trading style and you're like, oh yeah, no, I get this. It's like, nah, it's probably not how it's gonna.
I mean, that's why I personally, like, every time when I see someone argue about how you should trade, I just ignore it, because everyone has their own thing, right? So yeah. Someone has a question for me. How do I pop it on the screen? Do I have to click on the like glass? Oh, there you go. Thank you. Hi, Aaron. Do you leave a
So
buffer?
Remy will do that, yeah.
Do you leave a buffer in your live account when you request your withdrawal? For CFD accounts, no, but on futures accounts, yes, because once you have your buffer, let's say your drawdown is 4,500 USD on a 150k. If you make 4,500 profit, your stop loss will be at break even. Okay, but let's say you make another 4,500, your account is now at 9,000 profit. Your stop loss does not move; it's still at break even. So you will have double the drawdown. So I would leave a buffer on futures accounts, but on CFD, I just requested because I don't trade aggressively there. Because the live accounts are easy on CFD. You know, you just need profit, a minimum of 1% sometimes, and then you can request it. But if it's a futures account, it's way different. So having a buffer on futures is definitely the way. But on CFD, I would just take the money because the only thing that is in your way with the money on CFD is the waiting time. And on futures, it's just all the rules that you need to surpass. So definitely leave a buffer on CFD, but don't on no, not on CFD. Sorry, on futures, but not on CFD.
I'm also just going to quickly go through chat and just see if there is anything that pops up. Stephen saying hello, Richard and Eren. Hello, Stephen. How are you? Udaiver is asking, tell me any trade in US JPY. So I can open up US JPY. This morning I had I was streaming with one of our community members, and we were looking at UJ as well. He was looking for buys, I was looking for sells. As of right now, we do have this little slowed section over here where price is trying to pull back. We had, this is on the 5 minute, if I go on to the 15 minute, we had this base area over here. So the way that it works is when a new trend is established, in this case, we were pushing bullishly from last week Friday into the Tokyo session this morning. At this point over here, price started sweeping recent lows on the 5 minute. So if I just zoom in, you'll see that there is, if this is the high point all the way up over here, then this is the most recent low swing down over there. So it's the most recent time that price tried to push lower. In this case, it consolidated a little bit. Price failed to make a new high over here and started pushing lower, sweeping this low point as well. If you go on to the 15 minute, you'll see that that becomes a base. So you have drop, a base, and then another drop. Importantly, this drop needs to sweep low points, and you need to fail taking high points. So this was the high of the day. This was the low. This then became a lower high. And then from there on, you start pushing lower. So the thing is, what tends to happen is sometimes these base areas gets retested. So in this case, nothing was retested over here. There was an attempt, but nothing particularly strong. Price carried on pushing lower and then retested and then volumetrically carried on pushing lower yet again. So if you asked earlier for a trade entry, I would have said strongly bearish on like the 5 minute and the 15 minute. But as it stands right now, this kind of momentum down here is very slowed. So I don't really like this all that much. I like seeing this more, or at least 3 or more bearish candles, then a bullish, maybe 2 bullish, then a few bearish candles, that kind of like thing. So as it stands right now, I would say price, if it were to start turning from this point, we have a very first area to come and test, which is this one that was reacted from previously. So the base area over here, if I look down towards the left, I can see that there was a significant low area down over here that was tested once and that we're at right now. Wow, it's even further towards the left. Yeah, so we're at a significant low area at the moment, so a significant point of interest. Multiple reactions previously from this area. So comes into it, pushes away, retest, pushes away, pushes through, kind of like consolidates around it, breaks out volumetrically, retests it, push out volumetrically, retests it, push out volumetrically, and now it's come back to retest it. So to me, this area where we are right now, we need to see either price absolutely sink through it, retest, and then continue lower, or we need to see price start attempting to push higher, retest maybe, and then continue again. So as it stands right now, I'm more inclined to look at sells purely because of how it was moving this morning. So the whole of today, if I go over to the daily, no, actually, no, not sells, not sells. We have a significant high area up over here. So ascending flag as it stands right now, even though we have an equal low over here, it coincides with a base area over there, which is where we reacted. And then when we had an opportunity to come back to it over here, we tested it on this candle over here as well. So I'm thinking more in the line of buys. If we can come back down to this point, potentially, let's see on the hourly. Yeah. We need to break through this area and then potentially come and test all the way down over here. So what is this? Maybe I can make it a little bit more clear over there. Something like this. Yeah, something a little bit more like this. So this price action there is 155.71 to 155.50. It's quite a ways away, but that is now taking into consideration we fail through this. Then we have another hourly base area over here where price has already reacted once. So pushed through, reacted, and continued higher. So this is a secondary area, and this is 156.37 to 156.22. So if we do break through, and we pass the retest, so we succeed on the retest, this is the area that needs to be tested. So you can then potentially look for something like that, just above that swing point, towards the mid or the lower point of this area. But other than that, I will wait for this reaction to take place first, personally. On the lower time frame, it's bearish. On the higher time frame, I would say it's bullish. Overall, bullish trend. So low point, high point, low point, lower high, slightly higher low, lower high, but higher in relation. So we have this whole section here that still is to be tested, but right now it seems as though it first wants to come and test down here first. I don't know what your opinions are on that, Eren. You trade the 12-hour and the hourly, correct?
Yeah, correct. Yeah. On UJ, I'll just have a quick look, just a second. At the moment, my bias is not really clear on it because we've tagged a 12-hour low now. So it could start reversing from this point and go up, but it can also just break that low and continue lower. But I would lean towards sells because the dollar is weak in my eyes. So that's why I would say I could see this going down. And then JPY itself is also bullish to me, which correlates with that. So I'm going to lean towards lean towards sells here on UJ.
Yeah, lower time frame for me, sells are definitely more bearish.
Yeah. It could bounce up here for a bit, though. We've tagged a significant low. We've swept a significant low on the 1 hour as well. So it could push up a bit here, but I feel like it will just get disrespected. But if it goes up, I see why.
All right, let me have a look further. Thank you, Remy, for your kind words. The Gary BB saying lucid prop just allowed SIL trading micro silvers. So what is the advantage of trading futures instead of CFDs? Eren, what would you say is the advantages there?
The price of the challenges, honestly, like, and you have no spreads. But the main thing is the price to me. You know, you pay like 550 USD for 100K on Forex, and on futures you can get one for like 150 USD. Now, obviously, you have less drawdown and stuff, but once you get past that, it's still worth it because you can get like 4 or 5 100Ks for the price of one 100K on Forex. So that's the biggest advantage to me because when I blow a Forex account, that's a 100K account, it kind of stings because it's kind of like 500, 600 bucks is not nothing, right? But when you blow a futures account that's like 100 USD, I don't really care because it's so worth it. You get 100K capital if you pass for 100 USD. Like, so that's the biggest advantage, honestly.
Long name Manowara Man. Anyway, may I ask what future prop firms you use? Which ones do you use, Eren?
I'm mainly just Top Step and Alpha Futures. Those two at the moment, and then I'm gonna obviously scale with more once I do well, but I haven't really started yet. So
Are you looking forward to the Fivers opening up its futures trading?
yeah, 100%. I want to see what that's gonna be like, you know, because every time a prop firm opens up a futures firm, there's something that's different with them. You know, they always have like something that's different. So I want to see what the Fivers does with it. You know, if they bring out a plan that's better than all of them, if they bring out a plan that's more beneficial, you know. So I'm excited for it, honestly.
You know what I'm gonna say? The Fivers has been like the absolute foundational rock when it comes to proper CFD trading.
Yeah,
If they were to, whatever they're going to do with the futures trading, I would say that it's going to be similar in its quality, if not better, than the CFDs.
yeah,
Because the Fiverr CFDs trading is already absolutely mwah, chef's kiss. You know, it's just execution times are great. The spreads are minimal on high liquidity pairs. The commissions, I feel like, is probably some of the best in the industry, or at least par with some
Yeah.
of the best in the industry. So, yeah, I cannot wait for the futures trading as well.
yeah, 100%. And then maybe you will make that move too. We'll see.
I will most certainly try.
Yeah, yeah,
I'm willing to give anything a test at least once.
yeah,
And obviously, my futures trading knowledge is limited. But that my forex trading knowledge was also limited when I started out.
right, exactly. So
That's not an excuse to say, "Oh, I don't know and I'm not going to try it." Like you need to
yeah,
go and learn about it. You need to read up about it. So a little bit of homework. If I can like find like an hour a day,
yeah.
I will definitely.
It's not much anyway. Like it's kind of this what you trade. You trade Nasdaq, right? So it's not that bad. It's just you got to learn the contract stuff. Other than that, there's not much. But I will say I'm still Forex mainly. I haven't fully switched. I'm just doing both, you know. But Forex is still the main thing because it works, right? It's been working, so I don't need to do too much either, you know.
Like, have you reached a point in your trading where trading has kind of like become like second nature? Like you rock up, you have a look, you're like, yeah, this looks good, enter.
Yeah,
Or
yeah,
is
hundred
it one of
percent.
those where you still have to like sit and ponder a little bit?
No, no, no. I just honestly, I see the chart. I know if I'm gonna trade, and if I'm gonna trade, I just enter, and whatever happens, happens. It's kind of like gotten boring to me. You know, it doesn't excite me. In like, as in, I don't wake up to trade. You know, I'm not like dreaming about trading. You know, when first you start, when you start, all you see is candles. You know, you just can't wait for the weekend to end to enter a trade. But I've gotten to the point where I just need to execute, and that's it. Just execute and journal.
What was the hardest part of your journey?
Honestly, I keep repeating the same mistakes. I don't know why I do that, but I just always make the same mistake. I had that for so long, and I blew a challenge that I worked so hard. Like I worked like a month. I just did everything I was supposed to. I was up such a nice amount, and then I just blew it. Like I was 1% off passing it, and I blew it due to the same stupidity. And then at that point, I was just like, keep if I keep making the same mistake, nothing's gonna change. There's no point in being a trader. And then I either change it now or I just do something different. And then obviously I didn't want to quit trading. That's not the type of person I am. So I locked in, and I haven't made that mistake since, but it can still happen. So we gotta stay locked in.
So I think, and I will probably always mention this, the psychology of trading for me is the most difficult.
Yeah.
Anybody can read a candle chart and say this is what they expect to happen. Anybody can start a strategy and do some back testing. And everybody's got their own ideas and how they believe backtesting should be done or how strategy building should be done. But the thing that I find that every single last person struggles with is the psychology.
Yeah.
Everybody. And what you mentioned now, that silly mistake, that one that you're like, I keep making the same mistake. That is the psychological side that's just like, man, I want to kick myself every single time that happens.
Yeah.
So, and it feels like every single day you come to the market where you still have that problem in place, where you get more frustrated, and then it's more FOMO and it's more revenge trading. And just from this one little issue, you have so many other brackets that kind of like just spread out from it. And just, if you can lock down that one issue, just that one, and you start seeing a bit of results, and you're like, okay, A equals B. If I do A, B is going to happen. But if I want C to happen, I can't be doing what I was doing to make B happen. So in that case, it's you making the mistake, but you're expecting something completely different. It's like the definition of insanity is doing the same thing over and over again, but expecting different results.
Yeah.
So you kind of like need to talk to yourself and say, you know what, I'm done with this. I'm done by being this guy. I'm done being this person. I don't want to do this anymore. You recognize what it is that you're doing, and you're like, okay, I realize that I'm about to do that. Okay, stop. Step back. That kind of like thing.
Yeah, that's the main thing. A lot of people are outside of the charts, and they're talking to themselves like, I'm not going to do it. And then when they get on the charts, they're a different person. They just keep the trade button. They'll do anything to just chase price and see profit on the screen. So that was my main issue, honestly, because the trading is there. My strategy works. I know how to trade. I know what I'm looking at. So all that's left is just execute. But it's just that psychology that just of I want more. I want to pass quicker, because that my approach is aggressive. So sometimes that gets to me as well, because I'm trying to pass quick. But then sometimes it's like, should I really have taken that trade when I risked that much? And then I would just keep taking a trade that I shouldn't be in. Like that had nothing to do with my strategy. Like I would just enter. So that was my biggest problem, man. It was really, really difficult. It took me at least a few months to get out of it. And a lot of blown accounts.
So you were talking about how you want to pass an account or fail it. It's one of the two. You're not going to be sitting in an account for 4 months. You're going to be doing it in a week, 2 weeks, 1 month max.
Yeah.
But then on top of that, you also mentioned that trading has become a little bit boring to you, or at least it's not as exciting as it maybe was in the beginning.
Yeah.
Now, do you think that your approach right now is that, I want to pass it as quickly as possible? Is that kind of like your way of like introducing a little bit more excitement into your trading?
No.
I'm going to pass it or I'm going to fail it.
No, I get what you're saying, but it doesn't really excite me if I pass either, because I know I can blow it quick. And once I do pass the account, I manage them so well. Like max 1% risk, 1-to-1 trades. I'll take like I passed the 50K recently, right? In November, and it's now January. I've managed to get 3 payouts on it. I've only taken 3 trades on it, and they were all A+ setups, all the trades that I'm supposed to take. in the last 2 months, I haven't made a single mistake on it. I could have taken so many trades on it to chase price, and I didn't. So once I get on that live account, I'm so good at managing the capital and taking the correct trades. But it's just I kind of have a different mindset on the challenges, and it's not for excitement. Excitement. It's just I don't want to be stuck on one challenge, um, because that just wastes time. Because my trading works, right? I've proven it. I've done 15 payouts on one account only in the last year, and that's I've taken 15 trades and I haven't lost a single one. And that is not because I got lucky. I only took the right trades. I only made the right decisions, and that is very hard to do. But I know I can do it now. So once I get to that life stage, nothing is stopping me from continue doing that. But when I'm on the challenge, that is stopping me because I'm on a challenge, right? So I can't get the payout. So you kind of have to, if you have that confidence of I can do it on a live account, you do just want to get it over with, in my opinion. So that's it. It's not excitement. It's more I want to get capital, because I know I can manage it and make money with it.
So it kind of like goes back to the idea that people they overestimate their abilities, and then they think, let me start with 100K, and then it costs them $500, but they
Yeah.
cannot afford
No,
to
no,
pay
no, no, no.
$500 for an account.
Yeah.
And that's where that idea of, okay, I can afford this, but because I have this belief in myself, I'm going to go for a much higher one because I can make that money quickly.
Back. Yeah.
And then reality kicks in, and they realize that they're not as good as they might, have perceived themselves to be. And now they're $500 short. And now the next time they take another account or they buy another account, they always have this thought in the back of their mind, like, $500,
Yeah.
I can't really afford this. So maybe it would be better for people that have like this let's not call it an ego, because it's not necessarily a negative thing. People that have this like baseline confidence,
Right.
for them, maybe it would be better to start off with a much smaller account that costs a lot less, and then approach it the same way that you do. You either
Yeah.
pass or you, but then it's going to cost you $25 to $50 an account, and you just hit it and you just go. And then the moment you get to the past phase, or the passing phase, where you're going to start getting payouts and stuff like that, then maybe you can see how your approach changes from that like full send or stop.
Yeah.
But the problem, I think, is that a lot of people kind of like overestimate. They pay the most because in their minds they don't want to play around with a 5K. They don't want to play around with a 20K. It's 100K or nothing. And then you blow your 100K, and then congratulations, you've lost $500, $600 on an account, and that affects your mentality. It affects your
100%,
ability severely. And you just, you're unwilling to admit that because, no, I'm a great trader, I can do it.
Yeah, I agree with that to an extent, because that is true. A lot of people don't know if they can trade. They don't have that data. They don't have the proof that they know what they're doing. Because you can talk all you want, but if you don't have results, after 2-3 years, which is fine, 2-3 years is nothing. But if you don't have the results to back up your trading, then you shouldn't have an ego like that. And if you do, then you're just being, I'm not gonna say any dumb words, but like just being dumb in my opinion. Because why would you buy 100Ks constantly when, first off, you don't have much money, you don't have much capital to work with, but you're buying it for your ego, right? So that's why I myself, I'm still young. I'm 21. Like, I didn't start with much money, so I got a small account, right? Not just because I want a lot of money and a lot of capital. I got it to prove to myself that I can do it, in a cheap way, in a way I can afford it. So if I blow a 10K, I wouldn't care back then because it's not that expensive, right? You can find a 10K
Yeah.
for about 50, 60 USD, that's fine. But if I was to blow a 100K, as much as I blew those 10Ks, I wouldn't have anything left, you know? I wouldn't, who knows, maybe you quit trading because you lost all your money.
Yeah.
So starting with a 10K, for example, or a 5K, it's not, the principle is not the capital, it's to show yourself you can do it, right? So you got to ignore the size and just focus on the skill. And then once you've got it, then you can go over to the bigger accounts, scale, and treat it the same. Don't treat it different. That's a mistake I made as well. I look at the numbers always, I don't think in percentages. So you need to adjust that as well. And then at that point, once you've gotten some payouts and you've bought an account with that payout, then you can buy 100K. And just then it makes sense to me. It makes no sense to me if you have no proof of what you're doing being good or correct or working, and then just constantly buying 100Ks. Like, you're just giving the prop for money.
Yeah, and on top of that, you're kind of like disproving your own like ego.
Yeah,
In
yeah.
the same way, like I have this expectation. I'm this great trader. Why do I keep failing 100K accounts?
Yeah.
Yeah. And then anyway, so I like that, mate. Like, just focus on getting the right steps in place and approaching it with the right mindset.
Yeah.
Yes, there's challenges along the way. Yes, you're going to stumble and bump your foot and, like scrape your knee a little bit, but those are learning curves. You're not starting from zero when you start again. You're starting from experience. So just kind of like focus on that and then build your way up from there until where reality matches expectation. My expectation is I'm a great trader, but I have no evidence that I am a great trader up until reality proves that. Take a 5K, buy yourself a 5K, build up from a 5K. It's cheap for most people, obviously not for everybody, but
no, correct. Yeah.
I would strongly advise against people just full sending, going in with, quit their day job and then going to trading.
Oh, no,
Your first 2 to 3, maybe 4 years is going to be rough, mate. It's really going to be rough. So maybe don't do that to yourself, from the get-go. It's going to kind of like alter the way that you view trading in general. So just be a little bit smart about it. Like,
yeah. To be honest, the job part, like, I don't get why people want to quit their job once they start trading. Like, it makes no sense because you need the money to get the capital. You need money to trade. So for me, like, at the moment, like, yes, I'm profitable, but I'm not making extremes amount of money. So why would I not work a job meanwhile to make more money, right? Because if you have a good month on trading and you add that on your salary or whatever, you've made almost double the money. So I would say stick to your job until you're making enough money from trading and other stuff as well, not just trading. I don't think one income stream of just trading would be enough to just quit a job, especially in your first 2-3 years. Some people do it, but most people are going to stay unprofitable, right? So yeah, definitely agree with that.
yeah, I don't think people quite realize the stress that they put themselves under. Like, working a job is completely different from day trading. On a job, you get paid regardless if you do any work that day. You just need to rock up.
Yeah.
You can rock up, you can go and hide in a bathroom and nobody can see you. You can claim you're sick the whole day while at work, and you can get away from not doing any work and you'll still get paid.
Yeah.
All right? Most jobs. Okay? Caveat, most jobs. But with trading, if you rock up and you don't do anything, not only did you not make any money, you can also lose money while doing your job as a trader. And that's the difference between somebody that has an absolute, like, bang average day job kind of like thing. You're going to rock up, you're going to get paid, you go home. Yes, it's probably not going to be the most amount of money, but you're still going to get a salary at the end of the month. If you're, if you're a horrible worker, you'll probably get fired at the end of the month. But the point still stands. For this specific example, you rock up, you're going to get paid. Trading, completely different. You rock up, not only might you not get paid, you might lose money.
Yeah.
And if you're doing trading in of itself, only that hits harder.
Yeah, because there's so much pressure, right?
You can rock up every single day and give 150% and walk away poorer. So don't do that to yourself. Don't go and place that amount of hardship on yourself for no reason. Take it slow. Don't leave your day job. it's completely different. Obviously, that is a completely different conversation when we're talking about people that get into this as a last resort.
Yeah.
If they like, they've lost their job, that kind of like thing, and they have a little bit of capital that they can play with instead of going and putting it on black at the casino or red on the casino. They try and do it with a bit of trading. That's a completely different story.
Yeah.
You're screwed. You're damned if you do. You're damned if you don't. So you may as well just give it a try.
Yeah. Right.
Are you seeing anything at the moment in the markets?
No, I'm still just looking at the EU long. Honestly, like it's so dry, this trade. It's just doing nothing, honestly. But honestly, it looks like it's probably gonna hit my SL, but it's fine, I knew that was gonna probably happen because it's a high risk trade, right? But there's just not much volume, I expected more volume, but I guess all the volume happened last night. Everything moved so much. So yeah.
I see somebody's asking for USD JPY. We went through it once. We can go through it again. Remy, if you don't mind, like bringing my screen up. We still have this same area where I marked up earlier, where we had the multiple reactions off of previously. So you can think of this as a resistance/support area. It was resistance. It became support. Now we're at it right now. However, JPY is definitely more bearish on the day so far. Yes, it started out somewhere over here, bullish push into the high points of the day, but since then it has been naught but bearish structure. First and foremost, we need to see how it reacts at this area right now, or where it is right now. We need to see it decide on a decision, on a direction. Sorry. Right now, it's a little bit consolidative on the 15-minute. If you go down to the 5-minute, you can see it. Very, very little momentum, very little volume, really pushing it in any sort of direction. We're kind of like just stuck in this little range right now. And the thing is, you want to see nice volumetric movements on a pair like UJ. Most of the yen pairs, you want to see nice volumetric movements. You can see here on the right-hand side, I've got all of the JPY pairs. I've got AUD, CAD, CHF, Euro, GB, all of the JPY pairs over here. And you can see on the day so far, all of them are bearish. All of them so far have been selling off. But how strong? So right now, this area that we are currently, we need to break lower and then retest. So something similar to what happened over here. So break, retest, continue lower. So we need to see something to that line if we want to continue the bearish price action. We want to see it break lower, retest into this area, and then continue lower from there. This is, in my mind, the highest probability if we stay true to the day's, the current bias of the day, which is bearish. However, if it fails to break lower, now this is a lot of if statements, but if it fails to break lower than where we are right now, there is a potential for it to potentially try and come and test where it recently had a reaction, which is all the way up over here. So you can almost think of the whole of the Tokyo session low as an area to be tested. So if I just move that out of the way, you can see it, this last candle over here, which is also a base on its bullish base. Price reacted once, twice over it, started pushing higher, came back to it, kind of consolidated around it over here, consolidated a little bit, volumetrically pushed through, retested, didn't break above it, and then push lower. So we can hypothetically see price come back to test this area again to try and push lower. But once again, if statements. If it doesn't break through and it starts changing its direction, then this is the play over here, first and foremost. But I think likely scenario is probably going to be more sells, because that's just how it's been showing. It's been showing bearish momentum. Yes, it's consolidating a little bit. But yeah, I see no reason just yet for it to turn, to become bullish suddenly. We need to establish a bullish trend first.
Yeah, I don't see it just randomly going up. I feel like everything points to a push down. On the dollar, I'm not just saying this because I'm an AU buy, by the way. This is short term that buy, but I
Yeah.
think long term this week we'll see a drop on the dollar all week, kind of. Um, so I don't think UJ is gonna go up much either this week. I haven't traded the yen pairs in so long, man. It's been so long since I've taken a trade on it. I used to trade it during Asia. I don't know if you've traded Asia session, but last year in between October and December, I had such a good run. Like I was just trading every night, and I won like every night. There would be a setup and a win. Like it was crazy. I haven't experienced something like that since. Like I'm just waiting for that to come back this year where every trade just hits, man. It was actually such a good run. But then since that, every trade during Asia now just loses. So I don't trade Asia anymore.
So you said you live in Belgium, correct?
Yeah, yeah.
What is your time zone in Belgium?
UTC 1, I believe.
Okay, so just one hour behind me. So I'm UTC plus 2, or
Yeah.
in front of me. You're ahead of me. Yes, ahead.
Yeah.
1 hour. So UTC plus 2. So generally Tokyo session, I'm fast asleep, mate.
Yeah, yeah, I get that. I mean, I'm young. I'm always awake at night. Like I'm a night person, honestly. So when I have nothing to do, like let's say I don't have a job to wake up for or anything, I'm just awake, you know. I can't sleep very fast. I'm more of a late night guy. I go out and stuff and then you just stay up, you know. So it's something like that more. Or sometimes I have night shifts as well. So then during that I'll just enter a trade.
Yeah, I used to work night shifts as well many
Yeah.
years ago.
Yeah.
So I used to do late New York session.
Oh right, okay. PM session.
Yeah. So I'm turning 38 next month. So
Okay.
I've come to appreciate a good night's rest.
Yeah. Yeah.
When you're younger, you know, everybody always says this, but like when you're younger, you can go for days and whatnot. That's true because your body hasn't kicked you in the groin yet for not 2 days in a row, you know.
No, I get that 100%. But when you don't sleep, you perform bad as well. So I also I work out a lot. I do a lot of sports. So if I don't sleep in general, I'm just a mess. So I need my sleep as well. So I need to prioritize it more, to be honest.
I was about to say, like, I worked shifts for close to 15 years.
Yeah.
So, like I say, so I know what it feels like to not have a sleep schedule. So I love having a routine now. And the routine is I go to bed every night the same time. I wake up every morning the same time. I get to go to the gym the same time. I get to sit in front. Yes, it might seem boring and whatnot, but if you haven't had the opportunity to do it in 15 years and all of a sudden, you know, your life changes to the point where you can do that stuff, you appreciate it.
Yeah, 100%.
I might be bored of it at some point, but not yet. I think as it is right now, it's not that bad.
A routine is very important, in my opinion, as well. I don't really have a exact routine like you, like sleep at this time, this time, but I kind of do have like a small routine of the work that I do at my desk and in general. And then once that's done, I'll just go to the gym whenever I want and sleep whenever I want. But yeah, the routine sounds boring to some people, but it's so useful, honestly.
I think it's honestly more the idea of if you haven't ever had it,
Yeah.
and then all of a sudden you have it, and you realize, wow, I don't feel like crap in the morning.
Yeah.
Wow, I can go out and actually go for a jog, and when everybody else is jogging, you know, that kind of like thing. I don't have to go and do my groceries when it's pitch dark outside late at night, you know.
Yeah.
So it's like you're standing outside of the store looking in, and then everybody's having such a nice grand time inside, and then you actually enter the store, and then it smells like cookies, and you know, it's just nice and warm. So that's kind of like where I am. For the last 7 years or so, I've had the most wonderful routine. So I'm very happy with it.
So you did a lot of night shifts then, right? Okay. Yeah.
Oh, dude, like 12-hour night shifts.
Oh my god, that's insane. Okay. Wow.
Yeah. In winter, it's specific. It's quite horrible in winter because I used to wake up. I think it was like 2 o'clock in the afternoon after a night shift or something like that, and then go to work at 6. And then when you go to work, dark, and it's dark the whole night, and you go to bed and it's dark, and when you wake up, it's like late afternoon. Like the sun goes down at 4, so when you go back to work, it's dark again, and it's just like, oh, dude, the depression. Oh,
yeah. That must have been bad. Yeah, I mean, some days I'll have that, and I just feel like where I want to see some light. You know, I can't imagine doing that for that long. That must have been very difficult.
Trading is entrepreneurial. It can be. It is. I think you should definitely approach trading as if it with the same like seriousness as you would approach, starting a business or going to work and being like a proper good worker, that kind of like thing. Approach it with the same mindset. I'm going to put 100% in. I'm going to be consistent. I'm going to pitch up every single day. Definitely like that. Can you have a look on US oil? Do you have a US oil on your? I don't have you whatsoever.
I think I do, unless I removed that. Let me have a look.
Yeah, I don't have a look at oil whatsoever, but Domso, we'll get to that one in a second. Gwen is saying buy USD JPY now. US is strong now. I'm on the DXY at the moment, and
it's kind of going down, no?
I don't know. Let's look at the daily. Let's give this a fair chance. Let's look at the daily.
Yeah, no,
so on the daily on the DXY, I wouldn't call this strong at all. If we look at most of the USD pairs, AUD USD is going up, which is usually an indication of dollar weakness. Euro USD, this is on the daily, is kind of like sideways on AUD, but it's got this slight upward momentum still, so it's still bullish, which is usually a signifier that USD is weak. Euro as well. Okay, the only difference is on Euro, it seems as though the way that it's currently moving right now is a little bit deeper of a pullback. So on Euro specifically, the Euro is a little bit weaker than the dollar at the moment. But GBP, USD, pound is stronger than the dollar at the moment, and it's still bullish. NZD is the same as AUD at the moment. USD CAD is going up. So against CAD, it's doing well, but it's still in a overwhelmingly bearish higher time frame push. So this is the very first time that on the daily we've had more than 2 at least bullish days, but we still haven't broken structure. So we're still sitting with a lower high than the most recent point. So I don't think that the dollar is particularly strong at the moment. So I'm not going to tell you what you should or shouldn't be doing. I'm not going to tell you, hey, buy gold, sell silver. I'm not going to do anything like that. I'm going to say, if buying UJ is a part of your strategy and a part of your plan, then you go ahead and do that. If it's not, then don't do that. Don't come onto a live stream expecting us to tell you what you should and shouldn't be doing.
Yeah.
Be your own master of your decisions. If you want to buy, you go ahead and buy, but make sure that you buy when it's in line with your strategy and it's in line with a well thought out, tested strategy at least. Tanuk FX saying yes. Evita, can you look at gold next, please? Yes, we can have a very quick look at gold. Gold is at an interesting point. Let's go over to the daily first. Let's start at the daily. So most of you know how I trade. I like momentum, and I like going from areas of either consolidation or an area where a trend is established and then an attempt at the breaking of that trend. So in this case, we had an uptrend the whole of December. The whole of December, we were pushing bullishly. We had one attempt, one day on the 16th, where we tried to break that upward trend. and then it failed and carried on up. When we did eventually start pushing lower, we came back to that same area on the daily, and we didn't close lower than it. And then now, from Friday last week, we had this very weird attempt to try and push price higher, which failed. But today, price is going higher. So, gold, I think, is bullish. Even though we've had this very large bearish day on Monday, the 29th, there was no follow-through. So, what I mean by follow-through is that today should have been a bearish candle. If we wanted to continue bearish price action on the daily, only on the daily. I'm just only referring to the daily specifically. So on the daily right now, I don't think that we're bearish, we're bullish. If we go down to the 4 hourly, you kind of like get the same idea. Price tried to push lower. So volumetric push lower, lower high, lower low. And then what happened over here? When we had the next opportunity to try and push the price lower, we failed. Price closed higher than the previous low. So what we have right now is, if this is the high, that got broken, and this is the low, that wasn't even tested. So right now, this is the high, this is the low. We have created a higher high up over here already, and we've created a higher low as well. So basically what we're saying is that the structure has now shifted from this bearish market flow that we had to a bullish one. Yes, on the 4 hourly, little bit shorter time frame than on the daily, but as it stands right now, it's starting to look like it wants to start pushing bullishly. That's just on the 4 hourly. On the hourly as well, if I go down one more, same idea. We reacted off of that significant area, which was on the daily. This was the daily bar. We pushed back into it, so that you can consider this whole section as a little bit of consolidation. If I just delete that one, you can consider this whole section as consolidation, sideways action. We've broken that sideways action now, and now there's a potential for us to come and retest the sideways action, so the consolidation, to potentially carry on pushing it higher. We missed this base area on the hourly. On the 15-minute, was there anything specifically on the 15-minute? Not really, maybe just that low point over there. But for me, on the lower time frame, there is this potential to push price lower, which I marked out already, because we've got this slowing at the moment. So I think we can potentially come back into testing this base area over here, or potentially testing this slight sideways action over here as well. So for the lower time frame, it feels as though there's a potential for us to try and push lower, or attempt at least to push lower. How low we're going to go, I really don't know. For me, it's more the idea of testing these base areas. So this base area over here, like I said, price 4373 to 4354. That's what I assume can be tested. And on top of that, we also have a gap in price from the weekend going into this new week. So we do have a gap here as well that we can attempt to come and test. But first and foremost, we have this high point of last week, Friday. So Friday high, basically, that first needs to be tested. So as it stands right now, a little bit more bearish on the lower time frame, 5 minute, 15 minute, but on the hourly, it's still bullish. Going up, it's still bullish, in my opinion. What do you think, Eren?
To be honest, I do agree with that. I do think it's gonna keep going up. That's kind of what I'm expecting for gold and silver. I want to see a push up on both of them. I also expected one on open last night, which happened, but I didn't really want to trade. So because it was just straight going up. So there wasn't really a reason to enter, other than the fact that I assumed it was going to go up. But yeah,
so just assumption.
Yeah, well, it was because of like some news that happened with the whole Trump thing. So like it was leaning towards a push up on open, and that is what happened. So I didn't just base it off my feelings. It was more because of the news.
I see. There was a question. What is that indicator, please, Victor? Which indicator are you referring to? Are you referring to this line, or are you referring to the painted colors in the background? So I have 3 indicators that I have on here. The first and foremost one is the market sessions indicator, which is just a sessions indicator showing Tokyo, London, New York, Sydney. You know, you can customize this however you want. It's just a visual aid to see the highs and lows of a specific session. Then I have a EMA, which is in this one at the moment is a 50 EMA, this green one. But I have a EMA 4, so I can have 4 different EMAs up if I wanted. But I rarely do that. I'm only ever on the 50. And then I have another 0 lag EMA, but I use this one very infrequently. Basically what it is just a little bit of a cloud. It's an EMA of an EMA. So if you zoom in on it, you will see it creates this line with a cloud. And the cloud itself is just the EMA of this EMA. So if I had the 20 EMA on right now, so EMA right now, and I hide this 0 lag, you'll see that the blue line persists at the exact same point. So it's just another type of EMA that I use, but I use it very, very infrequently. It's more, to me, it's more of a, it's more of like a visual assistance to see if momentum is slowing down significantly or not, or if I can see a lot of potential changes in the market, as an example. So here, during the Tokyo sessions, you can see that price is very sideways, but you will see it also on the EMA as well. But you can see it on a 20 EMA that, you know, it's converging closer to the 50, and if it starts expanding, it means that it's potentially going trending again. But I use this one very infrequently. But this is usually my setup. Oh, I should switch that one also. This is usually mine, and I purely use the 20 EMA, the 50 EMA, as a very quick visual reference to see where price was. I tend to trade price action and then the candlestick characteristics.
Richard, I do have to go now. I'm going to have to leave you by yourself, unless someone else is getting on. But I do have to go now. It was nice to be on with you. And I'll see you next time. Take care, guys. And have a good day. Peace.
All right, Eren, have a good one. Thank you for joining us today. Thank you for keeping me company.
You're welcome. All right. Bye-bye.
Cheers, mate. All right, let's have a look-see. UJ breaking lower. I mean, okay, that was 12 minutes ago. Once again, it needs to break and close and then and pass the retest, in my opinion. Still very much sideways for me. It doesn't have this nice volumetric movement like it did over here, which is something that I would rather look for. This to me is just very like choppy movement, which is very unappealing. So right now it needs to either break lower or break higher. So what happened now is we basically had a wick lower, and now we're getting a little bit of bullish momentum. So in general, if I look at the candles, like I compare these candles with what was happening previously in the same time frame. So over here, you can see it's a lot of sideways, very much indecision. Candle bodies aren't very large. The wicks are large as well. This is very much indecision. Then you start getting this nice bullish movement out of that area. But overall, you had a much stronger bearish reaction in this area as well. So this might have been a very short-lived attempt to push higher, which is exactly what happened, because it was a break of a significant area, which, like for argument's sake, Tokyo low, significant area, break, retest, continue lower, and now we're at the same point again. Now we're basically at the lows of last week Friday. So that was the low of last week Friday. Let's mark it completely all the way through. we've swept the low of last week Friday, and instead of continuing lower, we're now reacting bullishly off of it, which means that this reaction that we had last week Friday, this initial reaction over here, is the price mover that we had. So you want to see either the same reaction when it comes back to that area, or you want to see it absolutely disrespected. And in this case, we're seeing the same reaction right now. Now, here's the question. Price action. What do we want to see happen? Well, this is our local high. This is our local low. We want to see whether or not, so I'll just mark it, local high, local low. Just move this one out of the way. This was the previous day low. So previous day meaning the previous session. Even if it's last week's low, it doesn't matter. This was just the previous day's low. So what do we want to see now? We want to see, first of all, we want to see this high being swept. And then when price does come lower, we want to see it create a higher low. And then a potential push to become a higher high yet again. So this line up over here, we want it to be a higher high. So we want that to be a higher high. And then the follow up, we want it to be a higher low. And then you can assume that that's either a new change or it's just continuation of consolidation. But in general, it is usually a attempt to try and push high price into a higher direction. So as it stands right now, it's made an equal high. We wait for the candles to close. We wait for the follow-up reactions. Yes, we've swept it. Yes, we've closed lower than the previous week's low, or previous day's low, sorry, not week. Yeah, we've closed lower than. But you would have wanted to see this continue pushing lower if it wanted to go lower. So as it stands right now, it is sweeping a new high. So it's making a new high in relation to the previous high point, which is good. It's a good sign. You don't have to trade just sells as an example. You can wait for reactions like this and then just trade what it's showing you right there. And that's generally what I trade. So right now it is sweeping, making a new high. It's already made a new high. So where is this high going to be? Let's wait and see. I'm just going to move that out of the way and this one out of the way. Let's wait and see where the new high is. Just also going to move that out of the way as well, so that you have the localized information. So right now, it's sweeping the high, but we have to wait for the confirmation of the change of its direction in its entirety. Can gold break out 44144410? Break out higher? 1414 1410. Let's see, where's 1414 and 114? We're already lower than 1410, and what's 1414? Somewhere over there. Let's pull this all the way back, and then it's kind of like just see what you were seeing. Maybe, look, it's already broken lower than that whole area as a whole, but it could theoretically be the same significant area as this. So this is a high point that failed, secondary fail, and then a third one we broke through. We retested all the way over here. It failed to retest and now is broken through again. I don't expect this area to have any sort of significant reaction because it's been disrespected the amount of times that it has already. And I do think that there is more stronger areas already towards the side of it. What you can say is basically this last candle over here, the last attempt to push price lower before it started pushing up, this is an area that is definitely being tested right now. It could potentially push higher. which is what we want to see on gold. We want to see gold push higher. So as it stands right now, can it break out from 4414, 4410? I think it's already disrespected 4410. But the way that I see prices, I want to see momentum slowing, and then the opposite directions. Like in this case, we had sideways action over here, an attempt to break up higher, creating the high of the day. Okay, but this is very slowed. It's a very slowed upward. So you're arching very slowly. But when you start pushing lower, you're starting to push lower with a little bit more oomph, you know, a little bit more volume. So what I want to see when we reach a significant area, I want to see price slow down. I want to see it slowly turn and then start breaking recent high points and not break lower. So I want to see, as price is coming down, I want to see it slow down, and then I want to see momentous movement going higher. So, sorry, I think a mosquito nailed my foot. It is itchy. So right now I'm not seeing that slowed momentum going down as yet. So I'm still going to be on the idea that we have yet to push lower still. So no, I don't think we're going to see a breakout just yet because it's still too strong going down. We're not seeing any slowed momentum. See this is a perfect example of what is slowed momentum. You have this strong momentous movement from all the way from the top of Friday. You're continuously making lower lows, lower highs, lower lows, lower highs, lower lows, and then eventually you get to the point where you start breaking that low high point where you're not making new lows, you're not making new highs. This is very slow downward reaction. And then eventually you start getting the volume, the momentum. And then you want to react off of this. So if you get this reaction over here, you want to start buying from that point. That's what I mean by slowed momentum, and we're not getting that just yet. So, no, I don't think it's going to break out from here. Are you sure? Have you checked 1 hour time frame? On which one is this? Alvin? On which asset were we looking at for that one? That was 22 minutes ago. So sorry that I didn't get to all of the questions. Suggestions on oil right now. Okay, so I don't have oil up whatsoever. I don't check oil normally, but I will go and have a look for you. Sorry, that's not the right one. It's... So we've got crude oil futures. I think I do have it here. Yeah. Let's have a look at the futures one on oil. Let's go to the daily. So on the daily, we are very much bearish, or were bearish at least, making lower lows, lower highs. So there's a low, there's a lower low, and they kind of have this downward trend. Let's have a look on the 4 hourly. We have this area over here that was reacted off once, twice, a third time now. So this was the downward push, and then eventually price plateaued down here or valleyed out, and then started to break recent high points. And then when it wanted to come back down again, it kind of like just wicked into this area and now is wicked into it again. And it seems as though it's having a bit of reaction. Personally, I'm a little unsure of whether or not this is typical price action. Overall, it's still very much bearish on the daily time frame, because we've made another low point in relation to last week, Friday's low. And we have yet to sweep a significant high, which is all the way up over here, 5888. So still very much bearish on the higher time frame, on the daily at least. 4 hourly is showing an attempt at potentially pushing bullishly. The hourly has had a strong reaction off of the zone. This is a very strong candle in relation to what we've been having overall. So there's a potential here that it could start pushing bullishly. Start taking last week's high, or not last week, Friday's high, Thursday's high as an example. That is a potential thing. On the 15-minute, yeah, on the 15-minute it looks like it wants to start pushing bullishly, but I mean, you're still, yeah, I don't know, like, it's a bit weird to mark this up like this because it doesn't seem like it fully plays with this idea. It is breaking out of this downward channel ever so slightly, but usually a breakout is followed by some sort of retest. So on the 5-minute, let's look 5-minute, it is slowly upward ticking after an attempt to push price lower, and then the whole day so far it's just been bullish. So lower time frame, it looks like it's bullish. We're at the high of the day so far, and we're not really breaking through it. We've swept last week Friday's lows. Yeah, I think this is the same for me as UJ was. We were at a significant level enough to kind of make me feel impartial to it. I don't know. I'm a bit impartial to oil at the moment. The thing is, I'm not a fundamental trader. So do take what I say when it comes to assets that are fundamentally driven. Oil is a fundamentally driven asset. So take what I have to say with a grain of salt. I don't know. I'm not familiar all that well with trading oil. But to me, the way that I see it is higher time frame is still bearish. Lower time frame is a bit more attempting to, let's rather say, become a bit more bullish. But we've swept a low here, and the reaction has been very marginal. So yeah, my viewpoint on oil is lower time frame, a little bit bullish, higher time frame, a bit more bearish. That's what I would say. Gold is heading down. Okay, indicator, we already went that one. Gold, we've checked. Hello, I trade NASDAQ index and I would like to see you review it after done with gold. I currently have bearish bias, but I have seen it went up on the OB on daily and started moving up. So I trade NAS as well, but I don't trade the higher time frames. I trade the lower time frames, 15 and 5-minute. So as it stands right now, it is still a little bit more bullish, but on the higher time frames, I had this same discussion earlier. Oopsie. The problem that I have with NAS at the moment is this. We have this flag pattern that's currently building, and it is one of those converging flags where price is it's not a flat flag, you know, so something like that, and then price is like slowly but surely, you know, coming back to the same point, you know, like this. So it's not an ascending flag that you would then expect either price to start pushing higher from off, but it's converging. So it's converging at the moment. So we've got a high point, we've got a low point, a lower high, a higher low, a lower high, a higher low. So price is coming closer to each other, and then it's waiting for a reaction. I don't know if this is particularly bearish or if this is particularly bullish, but as it stands right now on the higher time frames, it's not looking good for me. It looks like there is a potential for us to even potentially go sideways for a while and then decide after the sideways action if it wants to go bullish or bearish. I'm more inclined to think that NAS at the moment is waiting for some sort of impetus. It's waiting for something to tell it which direction it needs to go. Because otherwise what it's going to do is it's just going to keep hopping between these points. And it can break. I mean, it definitely can. But it can also just continue doing this, which is horrible price action. Because then you have to basically try and, this is on the daily by the way, then you have to basically try and get the high points of the day and then sell from there in the low points of the next day. Great work, thank you. You forgot oil. I just kind of like had a look at it, but like I said, when it comes to oil, I'm not the most familiar when it comes to oil, and I don't agree with the idea that every asset moves the same. I think price action is generally the same thing, higher highs, higher lows, but I think what's the fundamental driver behind it is a little bit more nuanced and different. So when it comes to oil, I feel like oil is a wartime asset. It's one of those things where wars have been started over it, and wars kind of like dictate how strong or how weak it is. Obviously, the more reliance there is on oil and the more oil production picks up or gets cut back is going to have a massive impact on the price of oil. As it stands right now, I think it's a little bit, like I said, bearish over the higher time frame, and on the lower time frame it's showing a little bit of bullish attempts at least, or at least it looks like it might have like a little bit of a bullish attempt. So my account's showing waiting for risk. That's actually it. So what happens is when you've passed phase, whichever phase you were on bootcamp it's the third phase, on high stakes it's the second phase, on hypergrowth it's one phase. How it works is the risk management team is going to have a look at your account and how you traded it, and if they are happy with how you managed your account, they will give you your new details. That usually takes a few days. Being that it is a new year and we've just come off of like a holiday, I would say just give it at least until the end of this week. If you haven't received your account by the end of the week, please go and contact support and then just find out from them, maybe what's going on. But I've yet to see somebody, being denied after successfully passing after a phase 1, 2, or 3 account. So I don't think you have to worry about it. Just to say, current forming point of concern volume area in the day is currently tested. Could become or could bounce strong. 4408. That's on gold. So 4408. You said. Okay, so let's go down on the hourly. So yeah, that's in line with this area that I've already marked. 15-minute for it. No, it's on the hourly. It's this base area of mine, which is where we are right now. But the price action is, let's say, 4,400-ish to about 4,411. So it's that like $12 area where we're testing right now. But like I said, we have a doorbell. I wonder who's that. Ah, it's Victor.
Ooh. Happy New
hello,
Year.
Victor.
Richard, everyone, Happy New Year. I hope this 2026 is going to be a blast, that we're going to elevate our skill, experience, and payouts to, the next level. How's everyone doing? It's great to be with you again, Richard.
Have we got Jonatan in the background as well?
Yes.
Yeah. Hello, everyone. I thought it was live. How are you?
Good, and you guys? I'm well, Victor. Jonatan, I'm good. Good to see you guys, both of you. Happy New Year. I hope you guys are well rested and ready to absolutely destroy the markets.
Oh, yeah. Oh yeah.
Yes, yes, I am, and I hope both of you are as well. Happy New Year to all of you, gentlemen, and everyone watching us from everywhere you're watching us from. Jonathan, how are you?
I'm good. I'm good. I was live here with Dirk in the morning. We were going to talk about the markets and trade setup, but we mostly talked about the AI apocalypse, or I did. I did. So I'm looking forward to talk about trading here now with you guys. What
Jonathan,
about you, Victor? You're
before
traveling out and about.
yes,
How's life?
I have been traveling for what now? Almost a month already.
I heard
Um,
you
but
went to 2 days ago. You went to Venezuela or something. You had something very important to do. Apparently, I heard.
I'm not at liberty to discuss that,
Yeah,
Jonathan.
of
Those
course,
are
of
things
course.
we discuss offline.
Yes, of course.
I cannot deny or confirm my role in anything going on there. Um, I'm not able
Yeah,
to, not at liberty.
yeah.
But Jonathan,
Well,
I was gonna say
Basis only.
before you continue, I miss you, man.
no,
How
I
have you
miss you,
been?
man. I
We
miss you
haven't.
too. I miss you too. Richard, I miss
um,
you too.
Oh,
Just to be fair.
I almost felt out for a second. I have to
But I
admit,
do
Richard,
I
miss
missed
just
you guys
coffee.
as
I
well
miss I
over,
miss
over the
my
New Year's.
miss
just
my
to give
coffee
you
stuff.
just to give you some context, Richard, and I know you're not a jealous type, but I mean, just in case,
How do you know
uh,
that though?
well, that's true, Jonathan. That's a
Yeah.
very fair observation. I do not know that. Maybe Richard is the jealous type. Who knows? But
Jonathan, are you a bit
just to
jealous
cover
over
my
the fact that Victor
basis,
knows?
I beg
If
your
I'm
pardon.
jealous.
What did you say, Richard?
I'm saying, Jonathan, are you a bit jealous that Victor knows that I'm not jealous?
Uh, that's a good one. How do you know that? How close are you guys really?
I mean, we have the weekend getaway, like
I'm a bit
once
jealous
a
on that.
month.
Yeah, definitely.
Yeah, very very jealous. Yeah, my boat is amazing.
No, but Richard,
Victor, you were
just
saying.
to give you some context, I have been streaming with you for some time with a lot of joy while doing so, and I haven't streamed with Jonathan for some time, relatively long time. We used to
Hmm.
stream every day together, and now
We've grown
it's
apart,
once
you
in
could
a
say.
while. Yes, we've grown
Yeah.
apart. So when I say I miss you, Jonathan, at least Richard, that's where I'm coming from.
I think
I
Victor
mean,
have had a few cocktails on his travels today. Very
are,
open-minded.
are they virgin cocktails or are they nice, like alcoholic ones? I would say you don't have to answer. Let's
Yeah.
keep it an enigma.
I-
Victor
I'll,
the
I'll, I'll
enigma.
let I'll let you be the judge of that.
Yeah.
Oh, I think you drink like a fish.
All right, so we have Scott is with us throughout the whole live stream. Hello, hello, hello. I'm glad that you are coming closer to learning how to spell my name. I appreciate that. Victor, very very easy name to spell. Mask Man, hello, Mask Man. Yep, he's the mask man. Um, you know what? I want to share my screen. Do I have my screen shared? Yes, I do.
You can share to your heart's content, mate.
Yes, we had Eren here earlier as well. How's Eren? How's Eren? Let me know, guys, in the comments. What do you think about Eren? Do we like? Of course, we like him, but how much do we like him? On a scale, that's not the scale. That's very a weird thing to do. Um, move on. Let's move on. We got gold here. We're looking at gold. We can look at
Jonathan
gold from
is
the.
the best for comedy. The best.
Yeah, well, most of the time, I'm not trying to be funny.
I was about to say, like
Definitely
you
not.
have like this oblivious comedic streak to you, like where you're unintentionally hilarious.
I weave myself into situations where it's like, okay, now I come to a like the end of the the end of the road.
Oh, look
There's
at this! I
a
have my foot in my mouth. What do I do now? Let's go with it. You know.
you know what? I'm in the living room right now, and I really enjoy being here. I'm gonna move my office. That's what I'm gonna do because I'm in the basement. I got my office in the basement. It's a small window, no lights, nothing. Here I can look at the birds. I have a lot of bird feeders outside. There's birds all over the place. It's a good
is
view.
that how about the distraction, Jonathan? Isn't there going to be too much distraction for you?
I think we need distractions in our life. Can't be too focused, you know.
Go touch some grass.
Yeah, exactly.
Well, in your case, snow. Go touch some snow.
So we started feeding the birds like 2 months ago before we had all the snow and everything, and the family went a little bit crazy over the top. We have an apple tree outside the window, and usually we have like 1, maybe 2 bird feeders. Now we have 12. So
Oh wow!
yes, the whole apple tree is just all over the place. So now we have doves, we got crows, we got small birds. So my son has a Nerf gun, right? And I bought new Nerf darts because what he does is as soon as there's a big bird or a dove, it's not supposed to be here. They're supposed to be, not eating our food. So he can maybe I can't say it's Nerf. It's not a real gun, but he shoots the big birds with the Nerf guns. And now we're getting less of them. So they're learning, they're adapting.
They're learning. This food that they get here for free comes with pain.
Yeah. No pain, no gain. But the small birds, they know. They're just sitting there eating in peace and quiet, and my son comes on and it's like, starts shooting with Nerf. The big birds.
You just see a pigeon or whatnot flapping his wings like, what the hell is this? No. And they just fly away.
And so in the summer, we're going to have, there's going to be Nerf darts just all over the front yard because it's snowing.
So those little plastic ones or little rubber.
Foamy.
Yeah.
Foamy.
No, not the balls. Like it's foam.
Foamy.
It doesn't hurt. It doesn't hurt.
Perhaps to us it doesn't hurt. I mean,
no, it doesn't hurt the bird either, Victor. There's no hurting going on here.
Okay, no hurting going on.
Yeah.
There's no pigeons, no doves. Nothing has been.
We're talking about like 10
in...
meters away. It's like it's not even. Maybe if they hit him in the eye, that's gonna hurt. Anyway, we should probably change subject here before the environmentalists are coming in here. Calling the social securities whatever on me here.
I'm sure the Nerf bullets, if they're called like that, are they bullets or are they?
No. The foam darts. They're not
darts,
dangerous.
Darts,
you make them sound very dangerous.
I don't think you can call them a bullet because I think a bullet.
Well,
I call it bullet.
Yeah.
I'm. Yes, they're not explosive. They're not knives. They don't have sharp edges.
You're not making it better. Yeah. They're not explosive.
No, but
thank God.
I'm sure it feels like a breeze when they get in gentle contact with the animals.
The way that I view it is here in South Africa, you have like these. It's like a carnival, you can basically say. And these carnivals have these pits that have these rotating sponge things, and the kids like try and jump over them, and then their legs get swept from underneath them.
Yeah.
Face full of but it's cushioned, so it's like it's not painful. It's just kind of like, whoa, I'm getting bumped by something. I would
exactly.
I would assume that is what it's like.
Yeah.
Basically, what Jonatan is saying is he's providing entertainment for the animals in the tree. It's entertainment. It's just that.
Yeah.
And probably also some service to society, I think, because if we feed the doves, there's going to be more doves. There's going to be Anyway, whatever.
Yeah,
let's.
that's wrong way. I think we need to go the other way.
Yeah, we
Yeah.
need to go that way. Okay, so gold. We're going to be looking at gold here. Do we?
Jonathan,
So
before you get into the gold, I am going to have to love and leave you guys because I
Yeah.
think my segment is over today, and I
Mm-hmm.
am dying for a cup of coffee.
Oh yeah, coffee's good.
So I am going to go and do that. Victor, Jonatan, it's great seeing you guys. It was really great to, see the two of you just be very, very like happy to see each other as well and have an opportunity to stream together.
Yeah.
I'm not going to intrude in that any longer. So, guys, have a lovely day. I will see everybody tomorrow. If you guys haven't already in chat, drop us a like. If you haven't already subscribed, drop us a subscribe. And also, if you haven't already, go and buy yourself an account. Why not?
Sounds good. I like that.
Take
Right.
care,
Okay. So we're going to be
Victor.
looking at
Thank you.
gold. Thank you, Richard. Take care and goodbye. Okay, gold, especially after PMI news. Now, looking at that comment, I'm thinking that we might have had news
No, the
today.
news is coming in later in about an hour and a half.
All right. That's right, at 4 my time, which is 3 hours and 40.
At the end.
No, what 1 hour and 40 minutes. Okay. So that's interesting. We got a US ISM manufacturing PMI. Now, what is the manufacturing PMI? That's PMI stands for price. Actually, I don't know what that stands for. I need to clarify. It doesn't matter. Who cares? But let's take a look at gold.
PMI stands for Purchasing Managers Index. Basically,
That's right.
Basically, the eagerness of the managers, those who are making decisions for companies to either expand or it gives an indication of confidence in the economy and the risk ahead, right? If they are increasing risk, the managers they will tend to buy less, and so it's an indication of confidence in the market, but also in the current market condition or economy activity, I should say. All right, so Jonatan, you I see you have IC markets down there with the green dots. What does that mean? Does it mean you are connected with? Do you have a live account connected, or what is it?
Yeah,
What
that's
does
right.
it
So
mean?
I have a live account here connected to IC Markets, and I'm in the process of moving some funds around. So I only have $500 in the account right now, and $500 is enough to open like a 1% risk trade on 1 or 2 forex pairs. That's kinda. But then if you are going to open a third one, then I don't really have enough margin for that. So I need to probably increase that to $2,000. And the idea with having this personal account is it's not really to make money from the personal account, because I'm not going to be able to get to the level of funding on my personal account that I can do with the prop firms. So it's easier for me to make more money on prop firms. But what's interesting with IC Markets here and connecting it to a trading view is that I have IC Markets connected to Trade Copier, and then every trade that I have on the prop firm is being copied. So now I can trade from within Trading View, and then also I'm working on building a track record here for 2026 using my personal account, because I believe there's only one way to build a track record, and that is through a personal account from a regulated broker. Otherwise, because a lot of people, they can say like, okay, I've made 10K in prop firm payouts, and that's amazing. I mean, obviously you know how to trade, but it's not really a proof of long-term consistent profitability in trading. Only real account can show that. So that's what I'm trying to build here for 2026. What's interesting with IC markets here is that the leverage is very low on gold. So to take a 1%, so the minimum lot size is 0.01, I believe. And to take a 1% risk trade on the account with the type of stop loss I have, I've calculated that I need a lot of money to comfortably trade gold and multiple forex positions open at the same time. I need closer to 10K in the account if I want to be risking, because the leverage is so low on gold, because I'm on the European part of the broker,
which has a leverage of 1 to 30 for for the retail trader. For us.
Yeah, exactly. And $500, obviously, you will not. And then if you look at, well, actually, so I have. You can see right here. I'm not sure if I want to show like the account number and things like that. But if I go to the trade tab here, you will see that I have. Okay, where's the trade tab? Is it here? Maybe. I think it's this one. Let's see if I can press that one. Yeah, this is the trade tab right here. So if I so the minimum lot size is 0.01 on gold. So if I were to enter at market right here, and then I would move my stops. Okay, I think I can only do it with a limit. So the stop loss, let's say the stop loss is going to be down here. And then the minimum lot size will be risking 26% of my account.
Basically, you need, about not even 10, but 20 times more capital.
Yeah, which is 10K. And
10K.
And I'm not, and I don't have the money laying around to put 10K into my personal account at this time. I can't do it if I manage to open so I'm looking into opening a company account, because if I open a company account and I trade on the company, then I can put in significantly more, because I got more money in the company than I have personal capital. But I'm not really sure what the laws are for that in Sweden, because then you go into the realm of being like, active trading and going into the realm of financials and things like that. So I need to look at the laws and talk to my accountant about that. But one solution I do is I've added another layer to the copy trading process. I have my personal account that's at the top, and then the second layer is the Fiverr's funded account, and then under that is all the other accounts. So all the forex trades I take on my personal account, and it gets copied to everything. But the gold trades I only take on the Fiverr's account, and it gets copied to everything except my personal account. So I'm not trading gold on my personal account.
Yeah. Of course, you mentioned. Well, if you do it from your corporate funds, as long as you're not managing other people's funds, there's nothing to worry about other than the profits are going to be taxed at the corporate rate, most likely. So, but yeah, that's another topic. And this is no financial advice for those who are listening in. No tax advice at all. Just thinking out loud. Yes, it makes a lot of sense. Yeah, that's one of the things that I think retail traders perhaps don't realize when they're starting off, or traders in general when they're beginner traders, and they think it's all about the strategy, and it's all about having getting the strategy right, the holy grail, and once you get it, you apply it, and that's it. You don't have to worry about anything else. But there's a lot of more coming into play. For example, what you just explained about the how do you streamline your signal? You go from a signal to actual trades on the accounts.
Yeah.
Most people don't have just one account. Once you have edge and you have capital, you're growing, like you are, like we are, then you have to be actively thinking about, having a strategy to copy your trades, and that may be simple, just one master and slaves. But things get complicated because you may have different strategies with different and different brokers may or may not have different leverages, or simply just, you want to diversify, and you end up having, after some time, a whole, like a spider web of, different masters, different slaves, and each one has a different reason, whether prop or personal, and it gets kind of extensive. I have to say, I have a spreadsheet with all the accounts, because simply I cannot memorize all of them. There's, I have a, I know where everything is connected, but to actually know for sure why, the reasons why, the signal is being modified for only this account and not the other ones, and things like that, it gets too much, and I need to focus on trading and not so much on the technical infrastructure. So kind of things you have to be managing, since we are doing everything, right? We're doing risk management, we're doing kind of infrastructure, we're doing troubleshooting when these copiers are not acting accordingly. We're quality managers as well. You have to check that every trade are, being copied the same way, and there's not too much slippage in between. I'm not slippage from the execution of the trade, but slippage in the copying, because that's another kind of slippage where, there's a little bit of a difference between the master and the slave, and that's also called slippage. And it kind of gets, you kind of become a little bit of a manager of everything. So there's different things you need to be all the time keeping in check. I have, for example, multiple spreadsheets explaining, making notes of these parameters of each account, and obviously VPS is running multiple. I think now I have about 11 VPS is running to be able to adjust to everything. Also jurisdiction. Sometimes, not very long ago, well, anyway, why am I telling this? But uh, not very long ago,
No, go ahead. I think it's
I
interesting. These are the things that are not talked about a lot. We usually talk about price action and strategies, but there's so much more to trading than just what goes on the charts.
yeah, not very long ago, you know, I was trading on a VPS which was based in the US, and I only uh, um, I in advance I make sure that jurisdiction isn't an issue, and after some time, apparently it was, and these things can happen, and you have to have contingency plans. You got to have options, and gotta be on your be on your toes, so to speak, so you comply with all these rules, whether they're prop firm, brokers, and to avoid that. That's a risk. That's part of risk management. Jurisdiction, whether you are still compliant with the licenses you have, depending on where the VPS or the account that is, the terminal is the IP of the terminal that you're accessing the account from, because if not, then you risk being in breach of some contract, and that could be meaning loss of capital or loss of profits. And all of these things are secondary to actually have edge. It all begins with an edge, but if you're only have edge and you can manage and streamline the whole process around the edge, applying the edge, then you're not going to be optimizing extracting money from the market, because it's not as simple as just putting money in one account and trade it with that singular strategy, and that's it, and that's you're going to do the rest of your life. That's not how it. That's not my experience in any case.
No, absolutely. I am very interested in going long on gold. We're going to be covering that NQ as well. So we're going to look at the NASDAQ in a bit as well. But I'm very much liking what I see here on gold. By the way, let me know if there's any, if you guys hear in the background noise or anything like that. Just let me know. I'm using the microphone in the headset, and I can switch if there's any issue with the audio. So let me know in the comments. So what I like about gold here is, of course, the fact that we built a base here as support. We kind of have that rounded bottom right here, and obviously, as you can see, almost every time when gold has printed a rounded bottom and a swing low here, you'll see continuation of the trend. It's still fundamentally very strong. I think, however, like I'm not sure how long I want to hold this or what I'm looking at specifically, but I think the retest and the bounce we're seeing right now, this right here, I actually think for a lot of people, this is going to be a good entry. I think what we're seeing right now, the price action we're seeing right now, yes, there is a big gap, here down to these lows. We also have that gap, the Monday open gap here, I believe. But I still think the current price action that we're seeing is it's a good reaction to support. What do you think on gold, Victor?
I'm looking at gold right now. I am. Shall I change my screen?
Yeah,
Let me
please.
check. And there it is. So from the higher time frame, there isn't, just like I usually do from the monthly, there isn't really anything to trade, at least not for me. It's just up, up, and up. The opportunity would be here with a retest and the fresh order block, but that's not happening anytime soon. On the weekly time frame, this is actually interesting because we had the first bearish weekly order block in a long time, and it doesn't mean it changed everything completely. Since if you look in the last couple of bars, the bullish weekly order blocks haven't been retested. One has actually almost retested. Was it retested? Yes, actually retested right there. But as you can see that the market has been very, very strong up to the point of breaking that previous high. And now I think it's too early to say anything, but this is quite interesting. We haven't seen a bearish order block in quite some time on the weekly time frame. Doesn't mean it's going to break the trend. I don't think there's enough indication for that, but it's still something I want to be watching. That's on the weekly. There isn't anything to trade, just to see that there is a supply zone currently with that big move we had on the 29th of December. Then on the daily time frame, we haven't broken any structure yet, right? This is the neckline on the quasi to indicate the reversal and break of structure. That hasn't been touched yet. So basically, the market has had a strong selling pressure coming to the market, but it hasn't broken any structural structural line or anything structural for the market. Let me clean this up right there. Okay, all right. So and we had actually quite nicely, we had a bounce on, we had two order blocks actually, and it was very clear from very early on that it's the second one that the market needed to use, and that was on the first time it got retested. That was on the 29th, and on the 21st it was retested for the second time, and you can see it just left a wick there indicating demand coming back. That's a demand zone, the market appetite coming back to the market. However, I do have a little bit of an issue with this because of that weekly order block that eventually I think this is not the top. I don't know, but I don't think we have enough reasons to think now that is the top. However, this could be this. There still could be more to this downdraft, so to speak, in the coming days. Perhaps during this week, we'll see how market reacts. But there's one thing I want to say. that is the following. We had, I can see there's enough reason for the market to keep on pushing. So, meaning your trade, and you said you don't know how long you want to be holding this, and that makes a lot of sense to me because now the market is breaking out. We had a bearish order block on the daily, fresh, that we're basically above it, and we broke out of it. And as long as that is true, I'm okay with going long, because if this bearish structure is broken, and that is basically what the market is telling us right now, then the likely place that we can expect price to go to is the next order block, which is at roughly 4,500 minus a few dollars. So that, to me, that is, as long as the market is above this line, which is 4,400, 404, I can see price going much higher, into the previous mentioned level, meaning I could see, something like this, and I wouldn't even, give it too much of a big stop, because it needs to hold that level. If it can't hold that level, then to me the sellers are back in control, and we're going to be likely see price retesting this order block, and if that's not enough, which could be, because it will be the third retest in for a very short time, then we could see price going back to the next structural level, which would be 4,230. So to me, on the lower time frames, I want to see price hold this level, the one that I just mentioned. Let's mark that with the hourly so we can see it on the hourly time frame. This level right there. And as long as the market, and that's basically, I think that's the break and retest for you as well, Jonathan. So if the market can hold that, and as long as it is able to do so, I'm willing to go long. Although on my quasis and order blocks, there isn't an entry for me. But just reading price action, to me, this is the level that needs to hold if price wants to continue higher. As long as it's below that, it will be seen as a especially today. If today it comes back below that level, what will be left behind is just one big wick, meaning price just squeeze the bearish daily order block, but the daily order block is back in at play, and we could expect price to be pushing, somewhat lower, probably into that structure right there, which is the daily bullish order block, at around 4,308.10. So, but I don't see any trades for me. I mean, using order blocks and quasis, I can see. Let me double check here. The daily isn't offering us anything. Actually, a short, but as long as it's above short is no go. So on the short, on the buy side, let me double check this. On the buy side, there is an area here I can see myself going long from, um, which is an edge like so. This is the neckline. This one becomes the neckline right away of the H4 time frame. So if price comes all the way down here, then I would be looking for a long. But for a short, I wouldn't. I can see price going higher, and to me, it needs to hold that line to continue. But it's not giving me any signal, and I know it will not give me a signal. Probably today, since I need the H4 to show me some order blocks, and it's not printing any currently. So yeah, that's my view on gold. Personally, gonna
Right.
be
Yeah.
taking a long from lower levels, but I can see price, as long as it's holding current levels, it can just continue higher, because that's as long as it's above that level, the buyers are in control.
Yeah, I like that. I think I'm with you on that analysis. When I'm looking at my gold chart here, is the daily looks really, really good. The 4 hour, also that local bounce, I quite like that. But I also feel like I would still be bullish on gold, even if we come down and hit this 4,300 level. I would still be bullish. So the question is, what's the I guess the question is not what the most probable move is, but it's a combination of asking yourself what's the most probable outcome, but also which of those outcomes have a good risk to reward. And I would say that gold moving higher in the foreseeable future has the highest outcome, but looking at current levels, then is the risk to reward. Let's say you look at securing the trade at the all-time highs, then for me at least, the risk to reward is not really there. What I want to see from a risk to reward perspective would be something like, maybe filling the gap, and then we're looking at that as being the stop loss, and now we're looking at a 2.5 R up to the local highs. So something like this. I would rather have an entry down here, because that's the trade I'm looking at. I mean, the stop loss is going to be down here no matter where I enter at current price action. With the current price action I see, I want that stop loss down here. So if I enter at market, that risk to reward goes from 2.5 to below 1, which obviously it's not worth it. So with that in mind, I do think that we might see gold moving higher. I think that's the likely scenario, but we have to think in terms of, what if I take that trade 100 times? Over the course of 100 times, I need to make sure that the rate goes in hand in hand with the risk to reward, and the risk to reward is simply not there for gold right now. I would actually prefer for this daily candle to close around the current levels and then move lower. Because if this daily candle closes bearishly or closes with a big wick, then I'm not so sure I want to be long on this. But if the daily candle is going to close where we have it currently, so around this level, and then we see the next candle come down here, that's where I want to enter, because this candle closing like this still shows us that there is a lot of buying interest in here. So I guess for those of you looking for a trade on gold right now, I mean, the current 1 hour candle is shaping up to be a nice candle. Looking at the 15-minute, that's a good reaction to that level. We might come up and test that high before moving lower. So yeah, if you're an intraday trader, I would probably be biased to the long side here on gold. But then, throughout the Asian session, we might move lower.
I think it has to do with holding time as well. If your higher, if your holding time is much longer, then I'm a bit more comfortable holding a long, since the market simply is very, very bullish, and even a big candle we had on the daily time frame, as big as it is, we know it's just a matter of time, that most likely it will switch back to bullish trend again, because I don't think I think it's too optimistic for the sellers to think that now is the top, and we're gonna now start going sideways and eventually going lower in the near future. I think we haven't broken any structure yet. The daily order block is just created on the weekly as well. Just created doesn't mean it's going to hold. We'll have to see how many times do bearish structures being created, they get negated or invalidated the very next candle. Happens a lot of the time. It's just the market getting fuel for another push up, and we have enough geopolitically tensions going on for gold to keep on pushing higher. Let's not forget Maduro dancing in an airplane, DJing, going to New York.
Yeah.
Nice beats,
Yeah,
by the way, Mr. Maduro.
Yeah, there's
nice
a lot of
beats.
good memes out there right now. Also, I'm absolutely with you on that. I think gold is interesting, but maybe not at this current time. What about Euro USD? I got about 10 minutes here before I need to jump off, but maybe we can cover Euro USD here. I'll be happy to hear your views on Euro USD. But before we look at that, I like the current level as support. I think people buying Euro USD here would probably be better off than selling, but I'm not sure. What do you think about EU?
AU has broken out of a level. Let me switch to mine. Thank you for that, Jonatan. You're very quick. You're quicker than me. Let me double check here on the higher time frame. Since you only have 10 minutes, I'm going to be as quick as I can. On the higher time frames, we have reasons to believe in a sustained downwards move for some time. It's too early to say because the market is still giving us the data, but we have a structure from the left, from all the way from 2012, not 12, 18, 17. You have left shoulder ahead, a neckline, that which has been broken, a first right shoulder being created right here, and then market expanding that range all the way to the low that was put in on the first, or the candle, the monthly candle on the of September 22 and 22. That structure on a higher time frame, and we've been discussing this for some time now, has left us with two bearish order blocks on the monthly time frame. Yes, the monthly, and the market has been reacting quite nicely from the first supply area. First reaction was this big bearish candle right there. The first time it came around, the second time around, it left a pin bar and created a bearish order block. That bearish order block has been retested, or is being retested right now, and the market, as we can see here, is below the order block, right? So that is at around 1.16 98.5 on my chart, but probably it's a little bit lower than that. And that is perceived by me, and I assume by many others, as the follow through movement of these bearish order block on the monthly time frame. We're just crossing that line. If that is an indication of what's to come, I mean, for the next couple of days, or perhaps even longer than that, then you can easily see the market pushing much lower in the next couple of weeks. I know that's a horror, that's far away on the horizon, but it should, the market forms from the top down, right? So this indication should be something we should take into consideration. On the weekly time frame, the weekly is also, you can see, did we create that order block or not? Let's see what's the open on this candle. It's 1719 and 6, by the way, and the close is 1719.6. So basically, it is an equal close, right? So that's a borderline case. I consider that to be an order block as well, because the sellers effectively were able to push price back all the way to the beginning. So I would indicate that as a weekly order block, right, like that. And that means automatically that we can use this and push it back, because this is no longer a fresh or the most recent structure we created. This is the structure we need to be looking for. And the interesting point is that, or thing here, observation, is that we already were at a weekly order block bullish when we created the bearish one. So if the market is just going sideways, it should keep between these two, bouncing between them for the next few candles. But you can see clearly that the market broke down from that level. So from a weekly time frame, the market is breaking down, and there isn't anything to stop us for some time. You can't see anything on the weekly. There isn't any structure to be seen. So it is looking quite bearish in that sense for the next couple of maybe weeks and days. However, there is a nice reversal pattern on the daily time frame. Let's take a look at it. And it is this pattern. Actually, that's not the neckline. This is the neckline. So it means I need to drag, or I need to mark it as the following. Here, from there, that's the move. That's the head. This is the left shoulder, the neckline. We broke it, and we're coming back to one of the two entry order blocks for a possible reversal going long, right? So that's an idea, but we're not there yet. So I would personally, on the daily time frame, I wouldn't be going long right here yet. I would wait for market to reach any of these two, and then start reading from bottom up to see if the market it wants and actually is succeeding in reversing back to bullish. Because if it's not reversing, we can see price going all the way to the next order block, and possibly there is a structure all the way below here. I know it's far away. It's about what, 200, more than 200 pips away. But if these two structures don't hold up, then to me, the most logical place to be expecting price to go to retest is that structure all the way at 1.14 and a bit. So on the higher, on the, as a swing trade, for a swing trade, we're basically in a no man's land, actually bearish, but we're in the middle, right? It can still, on its way down, it can still come up and then go lower or just continue. So basically, this is not a great place to be getting in, at least from my perspective, trading the way I do. And the H4 order block as well, we can see how the market crashed down after breaking down this daily order block. There was also a reversal on the H4 order block. See here, there's an H4 quasi that once it, that's it. That to me is a confirmation that this structure, was being seen by market participant, because once it broke, you can clearly see the market, everyone understood that we're going lower, and there wasn't any even an attempt to come back to retest these levels. We just crashed down, came as if like a brick falling from the sky, basically. It's this list level that we try to hold on, but the market failed to actually create a quasi here, a proper reversal pattern. You can see how it wasn't able to break. This was the possible, the head, left shoulder, the neckline, which never was broken. You can see the top here, that was just all weakness coming down there, and it was looking very weak, even though that's supposed to be a demand zone. So to me, I don't have anything to trade here on EU. There is no, the last order block is bearish on H4, which is this one, but we're not retesting that. Um, I don't know, anytime soon. Maybe things will change during the day today, but so far, the the tone is decided by the sellers, and we're not getting this area retested. Doesn't seem like it right now, and most likely for the rest of the day. Even though we have rat folder news in about 1 hour and 3 minutes. Thinking about that, let me go back to Jonatan, because I think I just used most of your 10 minutes left.
Yeah, there's no worries, Victor. So I do agree with you that there's a lot of buying pressure here. It looks rather bearish. I cannot ignore the current support that we're testing right here. I view that as the range EQ and the current support. And oops, that's the wrong one. So going down to the 4 hour, I think for those of you who are trading intraday, I think it might be like if we look at this, for example, so we had price coming down, bouncing. Let's make that a little bit bigger so it's easier to see what I'm writing. So price came down, bounced here, and then came down again, bounced, almost printed that W, and then it broke down, which tells us that this is decent, okay, strong support on the lower time frames. But then we broke down. If we reclaim this level again, like that, and when we start trading above that level again, it tells us that there's strength in the market, and we're reclaiming a lost support, and there's most likely a lot of buying volume down at these levels. And if we do see that, I wouldn't be surprised to see a move. Let's see, a move up to this area here. So from an intraday perspective, I think we're probably looking at a resistance at around 1.17200, so around that area right here. That's Obviously, a low time frame intraday play, nothing that I'm interested in really, but interesting level definitely for Euro USD.
There's another observation I would like to share with the viewers. Let me switch to mine if that's okay with you, Jonathan. Double checking if my screen is showing. Yes, it is. So, one thing that of course, breaking of this swing low, which also is the lower limits of that demand zone that was broken and where the market accelerated to the downside, which makes a lot of sense in terms of price action. Um, and so, yes, I think the sellers are in control. However, for the current day, on the daily time frame, the ATR is at 49.6. Keep in mind though that we had holidays not very long ago, so maybe not maybe for sure, a couple of these days that are in the calculation of the ATR includes holidays, with compressed ranges. So it's likely that the ranges will expand. If you look at the graph for the ATR, we can see that from actually this is the holidays, right, going much lower, and but for some time already the ATR, the ranges has been being compressed. Now this is normal for the holidays, where the ATR, the volatility, the ranges that are compressed, volume is also compressed on holidays because simply there are less market participant, less volume in the market, and the natural rhythm of the market is that after these holidays, after these off seasons, you will see that the market will expand. So it's going to take a couple of days to come back to the ranges, but that tells us something of what to expect, right? So the next the what would be the average range to be expected, or the a realistic range to be expecting now. The ATR is currently showing 49, as I said, but I think you can realistic or reasonably expect maybe a little bit more than that, because we know the market is going to be expanding after the news, after the holidays, I mean. So that's going to be maybe, instead of 49, maybe 55, or maybe a little bit more than that. And let's measure what it's done today. Today, it's measured already 64, meaning, it can go lower. Yes, everything is possible, but it's kind of a little bit stretched already with not a lot of news happening. There's news coming out in 1 hour, but I haven't seen anything on, on the any major news coming out that could um, be a justification for price to expand even more its range today. So basically, the sellers are in control, but for today, it may have traveled or traded its range for today. So maybe it's not going to expand any longer. So that's something we want to be watchful for. So I still want to be, if I were to trade this, I would be looking for shorts because sellers are in control, but only into the, closer to the low of today, and not expect a continuation necessarily. I mean, momentum can tell you to hold longer. Maybe your EMA is trailing the trade, but keep in mind you want to be taking off the trades, part of the trades at the swing low if it goes there, and not try to be a hero and think it's going to continue on and on, just because the ATR doesn't tell us that story, unless there's big news happening, which is not the case right now.
All right, yeah, I like that. Makes sense. I gotta jump off, guys. I will see you all tomorrow, and Victor, I'll see you as well. And good luck with the trading. Take care.
No problem, Jonathan. Thank you for coming in and paying us a visit on this slot. I like that, and I'm sure the viewers love that as well. All right, let's
All right, see you
a
soon.
round of applause for Jonathan as he is leaving and left the building. So we had, by the way, is the for traders who are, for those who are have been expressing their feedback. We at the Five First, we hear you. We act, we try to accommodate you as much as possible. And there's a announcement has been announced that the new bootcamp accounts will have a 1 to 30 leverage instead of the 1 to 10 that we so far had up to now. So if that was the reason, it was one of the reason perhaps, or perhaps the only reason you had to choose another program because of the leverage, which is 1 to 10, which is to me is okay, and I can still do just about anything and apply all my strategies on 1 to 10's leverage without the way I like it, without going too small. um, if that was the reason for you to consider another program, then you should reconsider the bootcamp account. Everything has stayed the same, all the rules have stayed the same, only the leverage has been increased for only the new accounts, starting today, if I'm not mistaken. Double check the website for the exact date, but new bootcamp accounts are will be 1 to 30 instead of 1 to 10, and that's a another sign that the Fifers is working with you and trying to accommodate as much as possible, so the traders, you and I, can have a better chance at succeeding, and for sure be satisfied while doing so. So let's check the chat, see how you guys are doing. It's a first one of the let's see, double check here. Yes, indeed. I'm checking here on the background. All right, so I have been trading already for before, but the streaming, it's the first stream of the new year, at least for me. Let me double check here. All right, checking the chat. So if you have any question, anything you want to share with us, you want to share your maybe new account you bought, maybe payout you had, or some just take profit being hit, or even if you're stop loss and you're frustrated, you want to share that with us. You want to share your insight or things you've learned from what happened, then the chat is the place to chat with us. While doing that, while considering what you could be writing in the chat, don't forget to hit the like button, subscribe to our channel. That's the way you can show some love back to us if you're of the opinion that what we do here is helpful to you and to others. All right, so the let's go a little bit deeper into EU, and since I probably don't think we will have any, I won't have any setup for you guys to look at. We might switch to GU or some other pair. Let's take a look. So the monthly, we spoke about that already. That as long as the market is below this level, right? This level, which is the 1.1696, it will be seen as a sign of weakness, and the market will likely continue or want to. Well, the easier path will be to continue to go up lower or a bit. I don't know how much, but lower in any case, since it will be perceived as a reversal, not a reversal, but a successful retest of that order block. Let's take a look at that. I'll show you the move. This is the bullish move that this is the creation of the order block, and we had a retest. And as long as we are below that blue line, it will be perceived as a successful retest, meaning the market can push a little higher, but eventually will be seen or expected to go lower on the, at least on that time frame. On the weekly as well, we had a bearish order block being created and a bullish one being managed at being invalidated, right? That's two signs or two ways the market is telling us that the sellers are in control. And if it closes like this at the end of this week, I know this is the beginning of the week, so it's too early to say anything, but if it closes like this, then we're going to be likely either continue directly or be after some retest and then continue lower. But the market is switching to bearish posture by looking at price action. On the daily time frame, we had a bearish quasi that was at play. Let me mark it. Market created this beautiful quasi. That's the left shoulder, the neckline, the head, breaking that neckline, and coming back to this order block right there. From the beginning, we could have actually I had this order block as a possible area it could reverse, and it did have the initial reaction, which was that one there, right there. We had a initial reaction, and now we had a second reaction, and you can see we broke the structure. It's not over yet. It can still push higher before actually going lower, but that fits into the reversal pattern on the daily time frame. And the daily time frame, the quasi, the TP is this swing low, which stands at let me see, the low is 1.14686. That makes sense on the quasi, on the daily time frame. However, you can already, I mentioned that already, that there are two order blocks uh, on the, between current price and that TP, which could be the reason for price to switch, because there's also a bullish, the let me change the color so you guys can see it. This is the bullish one, and this is one probability, right? I'm gonna mark this one as red so you can see the difference. Actually, maybe red isn't the best color to choose. Let me choose the blue one. The blue one is the bearish quasi. I didn't put it um, red because of the red candles we had. You wouldn't be able to see it, but as you can see, the blue quasi is the bearish reversal pattern, and the yellow one, this one, is the bullish quasi. Both of them at play, one in a different phase than the other one, and you will see price react to both of them. We don't know you can't say in it's thing of probability. You don't know in advance which one is going to be completed, but you will see the market react, most likely react to both of them, right? Because they're there, they're visible, and the market reacts to them very, very often. So we'll have to wait to see which one is going to be followed. But the best way to navigate this is to wait for the market to reach the relevant levels, right? The entry order blocks on daily or whatever time frame you're looking at, and wait for the market to actually give you the reversal on a lower time frame. Meaning, right here, you can go lower and break and follow and read price action to see if they're reversing or not. Price is not reversing, then you know which of the two scenarios is going to be most likely be completed or played out. But right now we have both of them very nicely, two quasis, two opposing quasis, which are not sure yet to what extent the bearish one will be prevailing, whether it's going to be prevailed just to these order blocks, or actually is going to go much lower to perhaps that swing low, which makes in terms of the quasi pattern, or just much lower, which also makes sense because that's where the market pushed from on the in August, early August. So we'll have to see which of the two will be the case. It'll be very interesting. The bearish one has weekly and monthly confluence. So personally, I like that more, because that means that I can target the weekly structure below, or this weekly order block as well. On, that's a daily, by the way, a daily order block. Let me double check. Is that on that's a weekly quasi and a daily order block right there. All right, so that's the EU. That's EU. Let me take these away so you can see the chart better. So we're still there on far away from, well, not too far. Let's take a check here. About 25 pips. That's not too much. Can be reached within even today, even while being a little bit extended. It is possible, not very likely, but still possible that we reach it. But once we reach this level, then I want to go to the H4 and see, is the market, and lower time frame, to see if the market actually is calling the buyers to the market or not. On the H4, nothing here seen. The last order block is the right here, as you can see, and we're far away from that, so there isn't really anything for me to do in terms of the quasis. I need to clean this up, right? So all of that is gone. There is no quasi anymore. The quasi has been invalidated. The reversal pattern. So let's clean all of those up right there. So right here, there isn't any reason for me to go not using the the intraday main strategy that I use. There is, however, a on the H1 and also on the H2, there is an area here that we could sell from. I would be a little bit careful though because of the ATR we saw today. Remember, it already reached well beyond 100% ATR, even if you consider post holidays expected range. So I would be looking for a short here, but I wouldn't be too eager to go into that trade. And you can see there's an H1 as well here. Actually, there's an H1 here as well that has already been retested. And is it still fresh? 2, 4, 6. Sure, it can be considered fresh. Let's take a look here, and then I'll go to the chat to see what you guys are asking about, what requests you guys have. There is no H4, so personally, I have a little bit of an issue with this setup. Not a little bit, I can't enter, simply as that. But on my scalping strategy, which I took already a number of trades today, I believe 6 or 7. Let me double check here on in the background. I took six trades, actually 7. One was break even. Um, and the so I'm done for the day in terms of I could be shorting that, to be fair, but if I would be doing it. I would go short. Let me double check if there's a reason here, or not a reason, a way here to pinpoint where the reversal could come from, right? So this is the neckline right there on the 30-minute quasi, and we do have a head here, which has already been, has it? Yes, it has already been retested. It's not a very tight quasi, I must admit, but it's valid. For sure it's valid, and it reached TP already right here. So, but that can still work for some time. So if we expand the quasi for a second or a second right shoulder, I mean, we could see price. We could pinpoint which areas are likely to be retested. It's quite big. I don't like that. The refinement is quite minimal. Actually, I see one big area here on using the quasi, so it doesn't really help me. It should be tighter than the H1 and H2, not wider. So I don't like that, but that's the area that I see as possible reversals or entry order blocks on the 15-minute. Let's change this for the 15-minute quasi. Where would that be? This could possibly be much. Actually, let's go to the 5-minute. Let's go to the right away to the 5-minute, which is my entry order, my entry time frame, and see if that's possible. 1, 2. Okay, so I need to consider this an entry order block. So that's 1, 2, 3, 4. Basically, it's too big, right? So 5-minute is too big of a structure for the 5-minute, and the 15 is also all right. So yeah, it's also one big candle. So actually, that's a reason for me not to trade it. Right? It's too big of a structure for me. The 15, the 30-minute, they have even wider entry order blocks than the H1, H4. That makes it a bit difficult for me to get a tight entry. So I wouldn't be able to, even if I wanted to. And my main strategy doesn't even allow me to do the trade using the rules of the main strategy, because the H4 isn't there, right? But on the scalping, I can use these levels and scalp them. But as I said, the 15 and the 30 minutes are not exactly helping. All right. So basically, I can see that we have reached the ATR and expanded beyond it. I still think we can have, a little push, or maybe that's not so little, but I push into the swing point and the swing low we had of the day, and may or may not push a little bit lower. But the question is, where will that continuation or reversal back to bearish happen? It could happen here, but it could just as easily go much higher and then happen from there. And even after a little bit of a squeeze, who knows? And then go lower. But that would probably be something for tomorrow. All right, let's go to the chat to see what you guys are talking about. Rito Basak, how are you doing, my friend? GU, yes, I will mark this as a something we want to be discussing. Let's take a look at other unbiased trader. How are you doing, my friend? Happy New Year to you as well. Great to see you here with us as always. Awesome. Let's take a look at what else. What else do we have? Um, let's check the chat. Mm-mm-mm-mm. I like. Thank you for your nice words. I'm glad you enjoyed that. Um, Sounds like a real villain. Okay, nice. I suppose. Jonathan. All right. So the question was more for Jonathan, not for me. But since I'm here, I'm gonna do the GU for you. So that's. I'm gonna park that for a little bit as I check. I go through the chat to see what you guys are asking for. Okay, someone here, Tabu Manoko 6042, is asking for some advice. I'll take a look at that. Let me check if there's anything. That's the um, uh, last comment. So keep those comments coming. We still have about 39 minutes in our stream. At the end of the stream, right at the end, there will be some red folder news. So keep that in mind if you're trading on the high stick account or any other program that may have a news restriction. You should take into account, like with the fifers, it's 2 minutes before, 2 minutes after. You should not be opening any trades. And in general, even if it's not part of a restriction and of the program you're trading, red folder is high impact for a reason. They're labeled as such for a reason, and that is, things can change. Price action, which were before very clearly a certain way, can change completely after the release of these numbers. So it's something you need to be careful with if you're trading, if you're holding a trade, and if you're right about getting into a trade as well. All right, so Tabo Manoko is asking, hi Victor, what advice would you give to a beginner starting to learn how to trade? Trade yourself or learn to use a bot? And which one would you recommend? Um, a bot is not something you want to be. Um, Let me put it this way: bots are not to be traded as, you know, primarily as a strategy, right? So I don't think that's not really. If you're thinking of trading, you should create the strategy. You should mold the strategy to your liking, and that's not going to be able to, you're not going to be able to do that if you go straight into EA trading, pre already created expert advisors. In my opinion, the right path to go is to learn to trade yourself, learn how these indicators work, learn price action, learn maybe volume profiling, and then when you already have some experience, you already see the answer right there. So not bot before, but when you are already a trader, then you can use bots, or you can code, you can automate your strategies, or perhaps your indicators, your proprietary indicator, your personalized indicator, to help you um, trade better, to streamline your process. And sometimes you can indeed have a bot, as you call it, a automated system, or an expert advisor in MetaTrader, but it is based on your system, right? If you trade any given something you buy out there, uh, first of all, they're highly likely not to be profitable. That's one thing. And two is, it will likely be sort of a black box to you, meaning whether you lose or win, you're still, as a trader, you're not growing, you're not learning, um, you're not closer in as to being an independent in the sense you don't depend on anyone else to generate your own signals. And as a trader, you there's no other way to be long term profitable in this industry. If you're you know relying on a black box that is not yours, not your strategy, then you basically are stagnant for until you actually start to learn trading by yourself, or for yourself. So I would say definitely learn how to trade first, and then eventually employ, or have someone code it yourself, your strategy or part of it, into an EA, right? That's in my way, the proper best way to go about it. That was the question. So let's see another one. Get Ashi Achu Casa. Get a Chu Casa. Okay, that's a nice one. Is asking, what do you recommend me? I have a trade. I entered on gold, sell, and I close or wait regarding the news. Um, Thank you for your question. We are obviously, I assume we don't give out signals, right? So even though we can give you recommendations based on, let's say, order blocks and quasi, what is more likely, what is less likely to happen, depending on the the strategy of the person who's talking. And I assume and I hope that you do know that you need to own your trades, meaning whatever I say should be an opinion to you, right? You should build your own case, whether you're going to be holding or closing, or better yet, have your trade plan in place based on data on previous trades, and back tested data that tells you exactly what to do, because you have the data. It tells you already, okay, this is more likely to last 50 times I did this, 65% of the times it went up. And that's information, that's useful information, actionable information for you to use. And that's the way we all should be trading, right? Having data to back things up. However, right, assuming that that's all good, meaning you know all this that I just said, let's take a look at gold to see if whether I would hold and that's just an opinion, if I would hold a sell. You said you are in a sell, but I'm not sure. You haven't said anything about the time frame. It makes a lot of sense if you enter sell on the 1 minute, or on the hourlies, or on the dailies. So let us know that. Get a true casa, whether what time frame you entered, so I can give you some idea, or some advice, some recommendation. So we do have a fresh bearish weekly. We are pushing straight into it. As I said before, we did create a bearish daily order block after we came from a daily order block below us, a bullish one. When it obvious the likely thing to do after we bounce from this is to go to the next order block in the same time frame in the opposing direction, meaning from a bullish to a bearish, so that we did very quickly. But now we are, as long as we are above this line, which is also a neckline for the quasi on the fifth, on the 4 hour time frame, and the level is 4,404.17, at least on this price feed. As long as we're above here, the price action is perceived as strong and bullish. Let's double check on the daily time frame what the ATR is, so we can have an idea. So far, it's 94 and a half, the range. And let's check the ATR. The ATR is currently at 86. And same thing as we talked about, we have a, on before before the holidays, you typically have a compression, and after the holidays, you have, well, actually that happened before the end of the holidays, you have an expansion of the ranges. So it's reasonable to expect that the actual range for the coming days is going to be a little bit higher than the average, because it is expanding, it is increasing. So likely you can expect something around 90 perhaps, or maybe 89, or maybe a little bit higher. And currently it's already at 94, meaning it's kind of reached its level for today. So if you're a day trader, then I would not expect price to go much higher than the current high of the day. That's one thing. And as long as it is above this level, it will be perceived as bullish. So, if anything, I would be wanting intraday to look for a trade going long into these, into a structure on above us. Let's go to lower time frame to see what structures we do have. On H4, there isn't any. On H2, there is beautiful structure there. Look at that. Price comes back into that order block, squeezes it a little bit, and pushes back higher, and actually already reached the opposite side. Beautiful ping pong action. Look at that. H2 that is, and this is also H2. To me, the trade is already done. I don't know the time frame. Remember, don't know that. But we created this order block, moved away from it. Let me change the color because I like the yellow color better. It's much better to attract attention. All right, so we have a bearish candle. This is the reaction that created the order block. Price comes back into it, and is expected to move away from the order block, the bullish one, into the opposing structure in the same time frame or a higher time frame. That already happened. So to me, the long trade from this order block is already gone. And that's the trade that I want to be taking. And I don't expect, or the chances of pricing going much higher today aren't exactly very high. So likely we're going to be holding this range right here, right? Maybe somewhere in between. I can't say anything because we already reached the other side. On H1, there isn't a lot to look at. There is a little structure here, but that's the last structure. So who knows if we're going to be reaching that. On the 5-minute, this reversal. Actually, the neckline on the 5-minute is all the way up here, which makes the whole thing not a quasi. Maybe there is a quasi. Let me double check. Open 9.94. Yeah, there isn't a quasi. So there is no reversal pattern here. To me, that means that I don't have a separate reason, right? The reason to go long was this order block H4 on the H2, which doesn't completely satisfy my trade plan. So it doesn't mean, personally, I wouldn't be able to trade to get in following my plan. But on the lower time frames, of course, you can see the quasis, the reversal pattern. Let's mark this. This is on the 2. Let me go check the 3. Maybe the 3 is better. Let's change this 3. 3-minute quasi. Remember, as we are breaking down the markets, don't forget to hit the like button and help us reach that 100K subscribers, it is in your best interest, since we'll be giving out a lot of goodies, giveaways, giveaway accounts when we do get there. And I can probably bet you would enjoy a free account from the Fivers. So, all right. So I would be interested in taking that trade from, if I really had to, because it doesn't have the 4 hour, so I wouldn't be able to trade it. But if I really had to take a trade, you know, for some other strategy, then I would be looking for getting long in those areas. Um, if you haven't taken a take profit yet, where you enter and what your holding time is, my friend. But I would be interested in start taking trades, a little bit before that H1 order block. If you have more reasons, I would be interested in getting long from these levels uh, when it gets there. So not now, and then taking it to that level. That would make sense to me. But as I said, it doesn't have H4, so this is just a lower time frame reversal, and it can just stay in here for the rest of the day easily, since the ATR already reached its ATR. There's no reason based on the ranges for it to expect to go much higher. Let's get a H1. Get a Chu Casa says H1. Okay, so let me go to that time frame. Yeah, I don't have a. If you want to go long, looking at the higher time frames, remember this is the level. The One of the things you want to be considering, price being higher than this level, as a to be perceived as bullish, right? As strong, and that level we've already come into it. Where are you? If your holding time is just for the intraday or maybe for an overnight, then this is the range that you're playing. You're basically playing from this high. Let me mark this with something else. Okay, perhaps not that one. Right? You're playing from this high, the high of the day, and the blue line. And currently, the market is in the middle. Hopefully, you got in, at the lower end of that range, and you should be trying or aiming to get the trade off at the under end, not at the extreme necessarily, because it may not expand beyond that anymore today, but something before that. That could be, if you're a little bit ambitious and you have time to babysit the trade and you're confident with your price action skills, you can target the H1 order block, which would be this. That's the level that we discussed here. And or um, if you're conservative, a little bit more conservative, and you're not too sure, you can put the TP above the before, not above, before the H2 structure. I know it's a big chunk from the high, but it is also a strong level. And not only that, the time frame at which on which the market is reacting nicely is from the H2, right? So it makes sense to not use the H1 in this case, but the H2, since the market seems to be speaking on the H2 kind of a frequency, right? So if it's respecting very nicely on a certain specific time frame, it makes sense to use that time frame for the targets as well. Hopefully, that's a helpful tip for you. So I would target before the area. And the bad news that I have is that it already reached very close to that level. So I would still target that and make sure that the market isn't switching over bearish. So far, it isn't, but you don't want to be left with holding a trade that already reached a target, and is now on its way back to where it began. Right here is an area that it shouldn't break. Let's see on the 15. The 15, there isn't anything. shouldn't break this, in my opinion. If it breaks this, you already have a bearish order block that was retested successfully, and a bullish that's, if it breaks this line, to me, it's better to. It depends on your strategy, risk reward, win rate, and other things that I have no information of. But I would consider taking the trade off if it breaks that line. If I'm actively managing a trade, and I will be targeting this level, just the high of today. Is it the high of today? It's not the high of today. This swing high from 20 minutes ago as a possible target to get your trade off. Hopefully that helps. Um, don't forget to, even though we try to give you, you know, honest and best recommendation based on, you know, of a real trader that we are, and it's useful and valuable, I believe, for everyone. You should always have your own plan, and market is going towards that level. You should have your own plan and trade your plan, not anyone else's plan. That level, perhaps, maybe a little bit before that, something like that would make sense to me to target. The market is reacting quite nicely. That's a huge, relatively large candle, and it closed above the swing high there. So that looks good, but there's no quasi here, not even on the 1 minute. That's an issue that I don't like. So I wouldn't have an issue, just closing it uh, where we are, uh, because of a little bit of a mixed signals and missed opportunity here. To me, this was a great place to get out. And if you're still in the trade, then maybe the market is on its way back. So we'll have to wait for that. Remember, the invalidation line is this line to me. All right, going back to the chat. Hopefully that was helpful. Get a chew, Casa. No problem at all. Thank you for watching us and participating in the chat. Don't forget to hit the like button and subscribe if you are not a subscriber yet. Let's check. Scott Watterson, how are you doing, my friend? Thank you for coming in. You've been so solidly looking and watching, observing us, listening in, viewing the stream. I appreciate that. Victor, can I trade on the Fiverr's website, or do I have to download something? I look all over the dashboard and I can't find where to trade. Scott Watterson, that's such a good question. I have never tried to trade through a web terminal, because that's basically what you're saying. You don't want to download a terminal onto your operating system. You want to trade using a web browser on a web terminal. I don't think there is. I've never tried. I've never looked for it. But I think the best place to check this is on the support. The live agent supports there 24 5, maybe even 24/7 available on our website, ready to answer all of these questions. And I'll have to check this, Scott Watterson. I'll have to check this and answer you next time we meet if there is a web terminal. I don't think there is. I don't remember. I'm sure, I know for sure that I haven't used it, but I don't remember seeing it. But maybe I'm wrong. Maybe there is a web terminal on our website. Pips made symbol is saying, "Hey Victor, I'm long at 4,413. Should I get out or hold?" That's the same question. Let me go back to 413. Okay, so you're below that level. That's a beautiful entry, by the way. That's a beautiful, actually, the level that this is the supply area. I thought that was the level. That's a nice breakout level, right? So you basically went long from this level. That's a nice place, right? You call that breakout. I would think, it's not a great place to wait for the break of this uh, um, structure to, to wait for the structure, for this structure to break. But if I were you, I would, put my target here and get out of the market at that level. Why? Because it's it's the logical place that the market will test and perhaps will push even higher. But based on the ATR, we shouldn't be too ambition thinking that the market is going to continue uh, on and on. This is a nice place to get out somewhere close to that line. Um, and because it's above, right in front of the supply zones on the H2 and H1 above us, which is a great place to get out. Market can still push. There you go. If you were in the trade, that would be your TP being hit. It can still push a little bit higher, I assume, but it can change quickly and leave you hanging there if you have your TP much higher. I don't think it's wise to have a TP at a low probability place. You want to have it at a high probability. You want your TPs to be hit, and if it goes on and pushes forward, then just be content with what you have, with your slice of the pie, and have it, enjoy it, and get ready for your next trade next time. Right? You don't have to get the whole pie. That's not your job. Just get your slice and move on for your next trade. There you go. I hope what was the name? What was the get a chew casa? I hope you got your tip. Well, I don't know. I hope you're not following my recommendations so literally, but I hope you're already in TP. All right, let's check. We have about 15 minutes for our trades, for our stream, I mean. Victor, do you think PMI news shall get the impact on gold price deeply at this current condition? Um, I don't have an expectation on any fundamental news. I'm a technical trader. That's my strong, and that's what I stick to. And I know I may be missing some edge there, but I stay close to what my forte is, which is technical analysis, and I only need to know when these fundamental news are coming out to make the decision either to get out of the news beforehand or hold it through, depending on how far I'm from my entry level and my stop, and what the expected possible movement would be in the first few minutes after the news, possible gap and things like that. You can estimate these uh, on if you have on historical data. You look back 50 times the same event has happened. What average move, what was the extreme moves, and so on. All right, so Kryptonite, thank you all for these great questions. We have them coming in. No problem, my friend. I will check and tell you about the web terminal next time we meet. Um, all right. Hi, Victor says, thank you. I want to know normal. How's the TP look like? Let's assume we buy from an H4 OB, or you have some general idea. Yes, this is a great question. You may have an idea where I'm going to. The way that I think and that I understand and I've observed and I see the market move very, very often, not all the time, right? But with high probability is if we are moving from one time frame, one structure in one time frame, you're mentioning right there, if you buy a reaction from an H4 order block, I'm going to let aside whether that's a fresh one, whether that's a part of a quasi, and so on. But just the structure in general terms, the reasonable area to target is the same time frame in the same structure in the same time frame in the opposing direction. So if you're going long on an H4 order block, the reasonable area to be targeting is a bearish order block that would be obviously above you, right? So the next bearish order block on the same time from the H4. If you are, let's say the market is very bullish, very trendy, and there's a lot of there's a lot of range space in the range for the day or maybe for the week, for the particular time frame, you're not time frame, the particular holding period that you're going for, then you can be a little bit more um, ambitious with your TP, meaning you could go one, uh, either the next, not the first H4 order block, but the second one, or the next time frame. That's ambitious, right? So you only use that when there's a lot of confluence for the market to not only move to the next level, but to actually continue moving in the same direction. Then you can target perhaps the daily, or maybe the H8 or H12 and so on. But reasonable, what you can expect is the H4 order block. On the on the flip side, if the market is, if it's a counter trend move and you're trading in H4 order block, a bullish one, and the market is, maybe I should explain this with the chart, right? So let's say you have an order block here, whether that's based on a quasi, based on freshness, or doesn't really matter. Let's say you have an H4 order block here, and the market created it. Let's say created it something like this. Actually, let me mark it better. So let's say this is the creation of the order block, and the market does whatever it does and comes back later on to this order block, and you're taking the trade here somewhere, and you're asking what is the reasonable, your stop should be, if it's only based on the H4, your stop should be beyond the order block, the level, the structure, and you're asking what should be the TP. Well, the TP should be another order block on, let's say, if there was, on the same time frame. So if you're trading from off of a H4 order block, then your next in the same time frame and the opposing direction, that should be your target. And you could push it further, and using lower time frames to pinpoint, align this to something more preciser. But the best way is to just front run the reversal or the reaction on that bearish structure ahead. So basically, I would be looking for something like this. This is the neutral, reasonable TP to be had. If you are in a very strong, let's say you have a higher time frame reason to also go long. Let's say the daily is very impulsive bullishly, or you have more reasons, more confluences on different time frames to make this move, to expect that the move is going to be even much bigger than just this. Then you can target whatever next structure that makes sense. Maybe there is a daily order block here, right, that makes sense for you to target. And in that case, if you have a daily reason, or you have multiple, you have you have very impulsive, strong trend in that same direction, then you can be ambitious, and look for the next level. Maybe it's an H4 structure. I mean H8, or a daily, or an H12. But in any case, you can go a time frame higher than the H4. On the flip side, if the trend, right, this is quite interesting information, if it is downwards, or you know there's on different time frame giving you sell signals, or reasons to think that the market is going to eventually go lower, even though you have a long setup and perhaps a signal to go long from here. What you could do is you go for a lower time frame. Maybe there is an order block here. you go to the lower time frame. So that would be, let's say, an H2 or an H1, right? Because the probability, depending on the trend and other confluences, the probability of the market shooting through and overshooting your H4, the neutral TP, the chances become bigger or smaller depending on other factors, other indicators you have from other time frames or even this time frame. So depending on that, if you have reasons to believe the market is, bearish on the higher time frame and is likely to continue to continue some in the future to go lower, then perhaps targeting the H4 may not be most reasonable thing to do, but perhaps target something else, something perhaps even doesn't even have to be there. It might be something just here on the lower time frame. You're a bit more conservative, but you want these TPs to be hit. You don't want to be holding that's not going to be hit with some good probabilities, right? So as you can see, your um, risk reward ratio, a lot of we see on YouTube and many gurus and furus talking about focusing on targeting 1 to 1, 1 to 2, and that's all great. But to me, what makes sense is that ratio should be based on price action, right? Not we imposing a fixed number onto the market. The market, the structures should guide us whether the 1 to 1 is what the market is highly likely to be hitting, or maybe something 1 to 2 as it is in this occasion, or maybe you can expand it to 1 to more, 1 to 4, 5, even 10. But it's not us wanting it, it's the market telling us, depending on what time frame and what signals are currently being given out by the market, and what the trend is, and all of these other also very important information to take into account. So hopefully that helps. Thank you for the question, by the way, very good one. That was by Crypto Knight, C8W. Thank you for that. Let's take a look. Paulus says, "Goody middag. First time trading the Pfeiffer's. Nice to meet you guys." Paulus, I pronounce that on purpose. Goedemiddag. First time trading with the Pfeiffer's. Nice to meet you. Same here, Paulus. Happy New Year to you and to your family. Let's double check. So the market expanded and pushed through that level very very nicely. And we can see that the market is now, let's double check, it went through the daily high and is reacting. We still have to see, it's still looking quite nicely. Looking for the lower time frames on the 1 minute, if it has any breakup structure here. But it's looking very nicely. It's expanding beyond the 100%, and even beyond what what you should expect beyond the post holidays expansion of the ranges. So that's nice. That's good for all those gold long holders, or maybe traders who may or may not already be have pocketed their profits. If you're trading gold and you're still holding, I know it hasn't broken any structure yet, but I would be very careful with this level, right? As long as the market holds this and keeps on pushing, I can hold that trade longer. But as long as it's, creating, look at that pin bar. I know it's only 1 minute. Pin bar right here, pin bar right there, an outside bar is now being shown and printed on the 1 minute. That's a reason for me to start thinking of getting out of that trade. It can still push, but the more time frames confirm by creating bearish structure, we'll still have to wait for the 5 minute to close to know how this will be printed. But it is looking like the market is reacting off of this line, which is the daily high. I would be considering taking off the trade if I were still holding, but probably I would have taken off before, because I want to be conservative. I don't want to be holding things, trades that may reverse before hitting my TP, or rather just have my TP a little bit less ambitious, a little bit more conservative, being hit more often, and being out of the trade than holding this trade for longer. Looking very nicely here. That's a very, very nice 1 minute for the H4 order block, H time frame to close, and the market is looking very bullish. I must admit, very bullish. Yeah, I like that. But from an intraday perspective, it's not, it's not the best thing to expect the expansion to continue. If you're looking for a swing trade, I can understand you can hold this trade somewhat longer. Uh, but for an intraday perspective, I would be definitely be taking the trade off around current levels. All right, no problem, Crypto Knight. Thanks to you. All right, so we have reached the end of our stream. This is my first stream for this new year. I wish 2026 brings lots of edges for all of you, but it doesn't come without you working hard at it. Ads don't come easily, and for sure not by themselves. So I wish you a lot of luck, discipline, and insight, or wisdom, should I say, for this new year. Join us. We here at the Fiverr, we're focused on giving our traders the best opportunities, whether that is in funding related, right? It's a prop firm. We are a prop firm, but also in education, in guidance, in support on your journey. On your journey towards those payouts and consistency. One of the ways to one of the evidence of what I just said is the Discord community. We have a Discord community, a very lively, and I argue the best Discord community of all the prop firm industry. It's all free. The only thing you have to do is have an account with us, and we will be once you have an account in the dashboard, left upper corner, there is that sign of the Discord sign. If you're not sure where it is, you can hop on our website and ask the live agents to help you out getting into the Discord community. But oh my, that is a great thing to do. We will be hosting on every weekday. We have workshops and moments we get together. The Five is organizes these workshops and also some events regularly for our community. And these are great moments, great opportunities to interact with other traders just like you, who may be further down in their journey or just starting off. And you can, think of what the potentials are of having such a community where people are sharing their ideas and helping each other as much as they can. So my invitation to you is to join our Discord. Get your account and get in our Discord community. All right. So that's it for today. Don't forget to hit the like button, subscribe, and I'll see you inside the Discord community or otherwise on our next show tomorrow. Bye bye. Take care.